Good morning, everybody. Welcome back to another episode of the Market Open. We are live. It is Tuesday, August 19th. Thank you, everybody, for being here. We've got a lot to talk about in terms of what's going on in the pre-markets and some of the macro data that we're getting in regards to housing in particular that we will get into. Yesterday was a very important day for the broader markets because of the geopolitical events that were taking place in regards to the meeting between Trump, Zelenskky, and pretty much every single important European leader. And based on what I've seen from those meetings, and we'll go deeper into it, the meetings were pretty good. And it was a direct opposite to the meeting between Trump and Zelenskky back in February, where they kind of had a blow up in the White House. And so from that perspective, markets liked it. You didn't see anything that was necessarily that problematic between the meetings. S&P 500 in the pre-markets relatively flat. Robinhood getting a little bit of a bid, and we'll talk about why. I think there's one reason why Robinhood's getting some momentum right here. 115.63 in the pre-markets. Nvidia 182.35. S&P again flat. S&P traded 40 million shares yesterday. This is below the average of 50 million shares. I think most traders are waiting on Jay Powell on Friday to see what he says at Jackson Hole. So that probably is the reason why I think you're seeing some flat volume on the S&P 500, but it has been flat for the past 2 days. And so we're seeing some of that continuing the pre-markets. Tesla right here, 335. That's up a little bit. AMD, 173. That's down. SoFi, 24.26. Not too bad. Closed at 24 yesterday. Google, 202. Grab at 512. Reddit, 239. You're not seeing that much price action across the board that's necessarily bearish or bullish. You're just seeing stocks that are kind of staying flat. And I think everyone's in anticipation of what's going to happen with Powell. Pound right here, 170, 159. And no one exactly knows what Powell's going to say, but everyone is waiting to see. The Qs as well, basically flat with the S&P 576. We also did have Home Depot earnings, so we'll talk about that, and we'll go deeper into what they put up this morning in regards to them being one of the major retailers, and see kind of what they're saying about tariffs, consumer demand, margins, etc. Palo Alto Networks had earnings yesterday. Good earnings, up 7%. I think the stock deserves it. It's down 15% over the past 5 months. They made a major acquisition. Cybersecurity demand in general from other companies like Fortinet hasn't really seen a massive tailwind. So it's good that Palo Alto Networks was able to essentially double the remaining performance obligations. And I think that's what, or at least double the rate of growth of their RPO from 13 to 24%. And that's what got the street excited. So that one is up 7%. Now, Open Door is up in the pre-markets right there. As you can see, 415, that's up 10%. I listened to the Open Door retail investing community leader, Eric Jackson, yesterday. Look, I personally don't see what they're going to do to turn around this business. I talked about it yesterday on the market close. I think the stock will pump off the sheer momentum of retail and off the eventual new CEO that they pick. And I think the company will probably pick someone that can speak to retail. And so that can get the stock to pump. But for me, at least, that's not a reason to buy the stock. But for other people, that is. And quite frankly, I think you can get exposure to Open Door through Robinhood, because I think a lot of the options that are being traded on Open Door are happening on Hood. A lot of the transaction volumes are happening on Hood. Open Door yesterday was the second most traded stock in the entire market from an options perspective, behind Nvidia, which is kind of crazy. Usually it's Tesla, Nvidia. Tesla was number 3. Open Door was number 2. So I'm not buying it. I'm not chasing it. I do like that it's going up because it's really good for Robinhood volumes, and I think that's going to help them have a strong Q3. But after listening to an interview yesterday on what you can do to change Open Door's business model, I was just unconvinced. I don't see the actual turnaround that takes gross margins from 6% to anywhere near 20%, which is like the bare minimum you would ask for when it comes to a tech company. So Hood is a proxy for everything. Honestly, dude, I know it sounds annoying when I say it, but it's kind of true. Like sometimes when you have a really good company, it tends to be a proxy for a lot of these things in the market. And I would just imagine, I have no numbers to quantify it, but I would imagine a decent chunk of this volume on Open Door, on the options market, or on just the pure equity side of it, is happening on Hood. And if that's the case, then Robinhood should be able to benefit from it massively as well. So that's what we got. We'll talk about Intel. They got a big $2 billion investment from SoftBank. We'll talk about a lot of these stories, and then we'll keep going from there. Thank you, everybody, for being here. Good morning, good morning, good morning. All right, let's get into it. Let's get into it and see what we've got. So I think we'll start off with Trump and Putin and Zelenskky and everything that's going on there. And let's just start off with Basent. He was live this morning, and let's see what he has to say about the meeting that happened yesterday.
Well, Joe, let's go all the way back to Friday, because I want to set the record straight on what went on in Alaska. Alaska was a show of force by President Trump. He invited President Putin to land that the Russians used to own. He displayed a huge amount of military hardware and then did a flyover. It was kind of like inviting your uncontrollable neighbor to your house and showing him your gun case. So then the President Zelenskky, we had a very good meeting with him and his team in the Oval for about an hour and a half. And then we met with the European leaders. It was an incredible group to have in the White House, all led by President Trump. And yes, the culmination of that was a call with President Putin. And my strong belief is that there will be a bilateral meeting between President Putin and President Zelenskky. And that's the only way to end this conflict, is to get the two sides talking.
There's such a large intersection between security and economics. I would think that any thing that we arrive at, or that Ukraine arrives at with President Putin, to get him to, I don't know, for lack of a better term, to behave or to live up to all of the promises that are made, what type of economic considerations would be involved there, whether it's carrots or sticks? Because we've talked about, he's made promises in the past that he hasn't lived up to, and there's a feeling that he's going to have to be induced to live up to whatever pieces is arrived at.
Well, I think the sense is that both sides are ready for this terrible conflict to end. And one of the ways to make President Putin want it to end is on the economic side. The Russian economy has 20% plus inflation. Right now, it is a war economy. I think more than 25% of the GDP is coming from the military buildup. So, you know, it's a very imbalanced economy. They're the frozen Russian assets. The runoff from those is now being used to finance the war. So, you know, there are a lot of moving pieces here, Joe. And then,
so essentially what Basent is saying, hey, he thinks there's going to be a meeting between Putin, Zelensky, and Trump, maybe even a trilateral meeting between all three. There's definitely going to be go good. And based on everything I saw yesterday, it feels like it's going to go good. So the White House released this picture. As you can see right here, you got Trump and Zelensky laughing, talking with each other. If you saw some of the clips of Zelensky, he was very gracious to even be at the White House and kind of take place in everything that was going on, which I thought was very interesting. It was just friendlier vibes all around, and you didn't have a environment that was like hostile, or an environment that just didn't feel like it wasn't going in the right direction. And then on top of that, you got a pretty important announcement after. Real quick, by the way, this is a picture of all the European leaders at Trump's desk, as you can see right there. So you got the Prime Minister of UK, you got Zelensky, you got the EU president, or EU Commission president, you have the NATO Secretary General. So I mean, like, the White House captured some pretty amazing moments of all these people together planning on how to navigate the eventual end to this war. You even had Trump right here showing off his Trump 2028 4 more years hat to Zelensky in the White House. I mean, you're just not having these types of vibes in a world in which they hate each other and they don't want to get anything done. So, I mean, maybe this is just something that's being portrayed in the media, but the way I heard the press conference yesterday, the way I heard the luncheon, and the way I'm seeing these pictures, it seems like there's the potential to make a deal. And then you got the bombshell last night. The Financial Times reported Ukraine is proposing to buy $100 billion worth of American weapons using European aid in exchange for a security guarantee from the United States. Now, the most important thing about this is not the $100 billion worth of American weapons, which, by the way, would be financed by Europe, so Ukraine wouldn't have to pay the money. So the EU basically taking the shoulder for that payment in order to get the security guarantee. And essentially that $100 billion would go into the American troops and military weapons that would need to be put on Ukraine's border as a guarantee of security. But the most important thing about this is that Trump hinted that Putin is okay with a United States unconditional security guarantee for Ukraine as long as Ukraine doesn't join NATO, which in and of itself is some form of a deal that could be made if Ukraine is willing to take that deal. and that could potentially be the end of this war. So it's going to take time, I think, to figure this out. But Trump did say on an interview this morning that he called Putin yesterday, and Putin was eager to talk. The European leaders proposed the same type of deal that Trump was planning with Zelenskky, and they gave Putin the proposal. And now it's going to take, I would imagine, a couple weeks for a bilateral meeting to materialize between Putin and Zelenskky. The only concern at the meeting was that Germany did not want a trilateral meeting unless there was a ceasefire. Right now, there is still not a ceasefire. There is still a war that is happening. Now, Trump on Truth Social yesterday said, screw the ceasefire. Let's just get to an end of the war, right? Like, instead of trying to get a deal to get a deal, let's just make the deal and have it be done with. But Germany kind of said, hey, we don't want to have any trilateral meeting unless we have a guarantee of a ceasefire. So there are still some concerns that are out there based on the meeting. But overall, it seems like yesterday was pretty productive. And obviously for the markets, it would be a good thing if we could end the war. For humanity, it would be a good thing. But the lack of geopolitical stability, the heightened instability that we've been dealing with over the past 3 years, if that could theoretically at least start to come to an end across the world, that would be a very good thing. So from that perspective, I think yesterday was a win for the United States. It was a win for the EU. We're going to see if Zelenskky is willing to do anything to negotiate on this deal. And if this $100 billion security guarantee is granted, then it seems like there's a shot. Who knows? Maybe by the end of the year. I think it's going to take a few months. But if there is a world in which both sides are ready to make a deal, then maybe that ends up happening. So that was kind of the major update we had in terms of Russia and Ukraine. Now, real quick, I'm just seeing this stock right here is down 35%. Viking Therapeutics. I know this is a popular one. It looks like they had earnings, and the CEO, if I'm not wrong from what I'm reading, just said that participants might have imagined certain effects. And as a result of participants having a placebo effect, that is why the stock is down. It looks like, again, I don't know this business very well. When the placebo arm discontinues the treatment early, almost the same percentages are as the active drug, 18 versus 20%. So the 30 milligram and 60 milligram are more than safe. You got some quotes by the CEO here. I do not know this company that well, so I'll try to go deep into it. But I guess the street does not like whatever he said on the earnings. And that one's getting hit. There you go. Down 35%. What is Viking's main drug? I've heard of this company for a while, but I don't know exactly their like core offering that people, or like at least investors, are excited about when it comes to Viking. But there you go. Yeah, it did pop earlier. And then it faded. So that might be a head fake. That might continue to go down when the market opens. That might be a dip that gets bought up. But you got that one that is down 35%. Oral GLP. Oh, these guys are into Ozempic as well. Dude, goodness gracious. This market is so big. Everyone is trying to figure out how to get people to lose weight. Dude, I thought they were doing like some complicated, because I've heard their name so many times, but I've just never looked into them. I thought they were doing like complicated types of diseases they're trying to solve. Okay, there you go. Looks like it's more in Ozempic. There's a lot of competitors. Yeah, a lot. And again, Novo pumped yesterday because they're offering a $4.99 version of their drug. Hims is offering it for like $99 a month. So, I mean, Hims did fall on that news, just given there was more competition from the actual maker of the drug, not a compounder that was doing it for cheaper. Hims right here down a little bit in the pre-markets, but Novo is up about 5%. Okay, hoodie. So the reason hoodie's up right here is because they got upgraded from Bernstein to $160 from $105. $160 from $105. Bernstein now has the highest price target on the street. And based on what I read, it looks like the crypto wave going into 2027. Again, Bernstein is at least one of the analysts. I actually know him, Gautam. I met him at the New York City event for Robinhood. He's a big crypto guy, and he's understood Robinhood as a crypto play for a very, very long time. He was one of the first analysts to raise them to $30 back when they were like at 20. And he was one of the first analysts to raise them to $105 back when they were like, I think 50. So now raising it to 160, he's pretty confident that crypto is going to be a massive tailwind. On the Tech Bros podcast last night, Tanner looked at some of the crypto volumes, excluding Bitstamp. And when he did the numbers, if you average it out for 3 months, now all 3 months are not going to be the same, but let's assume they are, you do get about 1.2 billion in revenue. So let's assume it's not the same. Maybe we do 1.1 billion. The street's expecting 1.09. What if we come in at 0.10 or sorry, 1.12? which is not as much as like July volumes across all 3 months, August, September. But if it's even anywhere close, we're going to beat earnings and we're going to have more than $1 billion of revenue. I think it's safe to say, as long as there's no crazy macro event in August, September, and August is almost done. And I think August has been a pretty good, I am very excited to see the August metrics, because August, I've looked at Robinhood's earnings for the past 4 years, historically suck. And it doesn't feel like August is sucking at all. And Open Door, honestly, is one of the catalysts for volatility, along with Ethereum and BMNR, all these assets that have popped up in August that have got people excited. The S&P 500 is actually up for the month. I think Robinhood's going to have a good August. So even if September sucks, if August and July can carry the weight, I think we're doing over $1 billion in revenue in Q3. And I think that's also why they got upgraded to 160. Now, little story on Robinhood. I took a phone call yesterday from a hedge fund manager in Singapore. And the reason I got connected to him is because he reached out. He has a very large Robinhood position. They started buying at 15. They kind of doubled down to 50. And so we just had a 20-minute phone call talking about Robinhood. He just wanted to get some more thoughts on it. And the number one thing he told me was the level of execution that he saw from Vlad over the past year. SoFi, by the way, 24.50, that one getting some love in the pre-market, is something he's never seen in the public markets. And so from that perspective, it was a very interesting call, because he was just like, dude, I feel like we're not exposed enough. He's like, I feel like my hedge fund is not exposed enough to Robinhood. Every time I see a new interview with this guy and see his plans and see what he's talking about, like, we bought as much as we could at 15. We doubled down at 50. We haven't bought since, but I feel like we're not exposed enough. So it's really interesting to see someone who manages a couple $1 billion actually talking about Robinhood in the way that he was. Now, ironically, he was in Singapore, and so the conversation of Grab came up because he saw that this is another stock that I like, and he was in the Grab while he was having a conversation with me. And essentially what he said was the pricing power that Grab has in Singapore is pretty incredible. He's noticed it in the fares that he's paying. It's almost like monopoly pricing, because you just would rather not take any other car. You wouldn't rather get any other experience. You'd rather pay the extra $5-6 to just take a Grab. The one thing he did say, though, is that he has some friends who are private investors in Gojek, which is one of Grab's competitors in Indonesia, and they've been burned so bad because Gojek's been down 80% for the past 5 years since it became public. And so the VC investments have just turned out to be horrible public market returns. So his only hesitation was just like, he knows friends that have been burned by Southeast Asian companies, but he also acknowledged that it's just hard to deny Grab is becoming a real force in the region, and that they are becoming one of those companies that you can't deny as a verb in the region. And so my pitch to him was just, hey, the numbers are starting to inflect. So and part of Gojek being a horrible investment to me is a bull case for Grab, because Grab's also been a horrible investment since going public, but you're not getting in at 15, you're getting in at 5, which is theoretically the bottom. I know like 350 was the bottom, but theoretically this is the bottom with $8 billion in cash and with numbers that are inflecting around net income, adjusted EBITDA, free cash flow, etc. So he's going to look into it. And it's interesting to see some of these people in the region re-looking at this stock, even though they use the product every day, they never thought of the company, but they're starting to give it a little bit of a deeper look. Okay, SoFi. I think we got some headlines on SoFi, and that's why this thing's oh wow, 24.90. This thing is pumping. I think the headline is right here. SoFi plans to add blockchain-backed international money transfers to app. SoFi to offer service using Lightspark's open source protocol. Okay, I need to do some research on this. Let's open up their IR page. Obviously, this is something that's getting the street excited. Okay, let's see the press release. Let's see. SoFi, are we at 25 yet? We are at 24.92. It looks like she wants to break. Rock Lab also up 2% right here. All right. SoFi announced its upcoming international money transfer service, which is basically remittances, enabling members to send funds abroad directly from the SoFi app with lower fees and faster delivery compared to traditional remittance service providers. Lightspark, a leading enterprise infrastructure provider that uses Bitcoin Lightning Network, will enable the technology via a UMA, a universal money address, to send and receive money seamlessly. Noto says for many SoFi members who regularly send money to loved ones internationally, the ability to quickly transfer money at a low cost isn't just a convenience, it's a meaningful improvement to their lives. By embedding this directly into SoFi's app, we're unlocking the value of blockchain technology to give members faster, smarter, and more inclusive access to their money. Lightspark CEO says SoFi is one of the most innovative and forward-thinking financial platforms in the U.S. Digital banks are embracing UMA because it's fast, cheap, and secure. It's the only open payments platform that exists. Bitcoin UMA on SoFi means customers can move dollars instantly, anytime, and globally, and we're excited to see the demand via SoFi's waitlist. It is launching later this year. It'll be directly in the app 24/7. No need for a third-party app. Okay, this is bullish, dude. This is one of the first crypto-native products that it looks like SoFi is bringing to the marketplace. Robinhood above 116 right there. SoFi 24.83. It's definitely getting excitement in the pre-markets as the market is thinking that there is some value to this. I don't think that's a horrible deal. I would want to go deeper into understanding exactly the method by which they're enabling this open source blockchain ecosystem. And I also will want to see what things they're thinking of building on top of this, because it doesn't just stop at remittances. I mean, that's just one feature. I would imagine there's going to be a lot of other things that SoFi is thinking about. Now, this is not the dilution, right? This is not, they're not acquiring some company to be able to do this. They're partnering with a company. So that 1 billion or whatever they raised of money, that's still on the balance sheet, and they're still going to be able to do whatever they want with it. But it kind of makes you think maybe they're going to get a crypto company soon if they're already embracing blockchain-enabled international money transfers, and maybe SoFi becomes a legit crypto play, at least to an extent, with users being able to not only buy and sell crypto, which is going to be happening pretty soon on SoFi's platform, but also SoFi enabling an entire crypto exchange, potentially for institutional clients, maybe something like Bitstamp, like Robinhood did. Which Robinhood only paid $250 million. Now, I don't know if SoFi gets that good of a deal because Robinhood bought it back in 2024. But even if they have to pay $1 billion to get a real crypto exchange, that could be very value accretive to the business. SoFi right there, 24.88. Not too bad to see some of this momentum. And also, I think this is something users want, right? People want the ability to transfer money seamlessly for very low cost fees. And the blockchain just makes it easier to get done, given there's not like a middleman like Western Union. So I think this is not a horrible deal for SoFi. Triple V, thank you for being here, and thank you for the $200 super chat. Appreciate you being here, Triple V, and thank you for the super chat again. Triple V is loaded up on hoodie, so he's been enjoying this hood run, but also UNH, which, by the way, UNH has continued its momentum holding 310. Now, it hasn't been able to break out of 310, but it has been holding 310. So I believe Triple V bought around 50,000 shares at like 270, 280. But United Health, they got the endorsement by Buffett and Tepper. It hasn't really gone away since then. You haven't really seen a fade back into the low 300s. You would think by now people would be like, all right, Buffett bought it, whatever. I'm going to sell it off. I'm going to take advantage of the pump. And some people probably did that. But the majority of market participants continued to buy the stock. In fact, United Health was the 15th most traded stock in the options market yesterday as well. So you are getting a lot more momentum on UNH based on the big investors. Lutnick's on CNBC. Okay, I almost said Nutlick, so I stopped myself there, but let me pull him up. Let's see what he's saying. Oh, he's talking about Intel. Here we go. Let's see.
Grant under Biden into equty for the Trump administration.
I get that. I get that.
People.
I just asked if you're going to get governance. You're going to own 10% of the company. You don't. Why? Why wouldn't you want
non-voting?
Okay.
No, stop. Don't overdo it.
Well, I'm not overdoing it, but you got a golden share on U.S. Steel, so it's not like impossible to imagine that you do want some level of governance here if you're going to put 10% of taxpayers' money into, or 10% of the company's taxpayers' money.
Let's discuss the golden share on U.S. Steel. What happened is the Japanese Nippon Steel made a list of 12 promises. How do you make sure after they buy the company, they live up to their exact 12 promises? You say, look, we'll have a golden share. And what was the golden share? 12 promises. Live up to what you said, you can buy the company. You don't live up to what you said, the government's going to make you live up to what you've said. This is Donald Trump's way of thinking, which is make people do what they say, make them live up to what they say, and make sure we get the benefit of the bargain for the American taxpayer.
I'm sure you've read the journal Pushback already, the op-ed page. Once the government acquires a stake in Intel, politicians will have an incentive to keep pouring on subsidies so they wouldn't have to admit a mistake. This is corporate statism, and it rarely does end well.
Well, we were giving away the money. I mean, imagine this. Look. The Biden administration literally was giving Intel for free and giving TSMC money for free. And all these companies just giving them money for free. And Donald Trump turns that into saying, hey, we want equity for the money. If we're going to give you the money, we want a piece of the action for the American taxpayer. How could that not be smarter, better, and more important for the American taxpayer than just free money for $100 billion, $1 trillion companies. Makes no sense. Donald Trump is fixing what Biden got completely, totally, and utterly wrong.
As somebody who's been around the capital markets for years, as you have been, I do wonder, how do you view this idea of state capitalism that's being introduced? I mean, you mentioned the golden share in U.S. Steel, the 10% potential stake in Intel, the 15% of the revenues that NVIDIA gets from selling chips in China, the $400 million in that rare earths company. I'm curious how you think about it, Howard, given, of course, your long career at the center of the capital markets for all those years. I think of you as a capitalist, but this doesn't quite sound like that.
All right, well, let's talk about the Japan deal. So Japan has offered to buy down their tariffs from 25% to 15%. They offered us $550 billion investment fund. And then Korea came in on top of it, $350 billion. So what are we going to do with those $900 billion? We are going to fix the infrastructure that China has competed away. What China does, and it's really very, very thoughtful, and it's an attack. They sell product here for half of what it costs. So they put the capitalists out of business, put us out of business in rare earth magnets. We invented rare earth magnets. Why don't we make them anymore? Because they sell them for half the value, and we don't have them, and then they hold it over you, right? Like a giant axe. And we've got to fix ourselves. We've got to make semiconductors. We've got to build pipelines. We've got to build nuclear. We've got to have the infrastructure to help our national security and our economic security. And that's what Donald Trump is bringing to America. When he leaves office, he is going to leave America safe, secure, and economically powerful. And if you don't do that, and you don't handle the Chinese risk and the risk that these people are attacking us, and basically, we don't make generic pharmaceuticals. Imagine that. If we had conflict with China, what are we going to do? Ask them to send us antibiotics? We've got to build those things in America, and that's what Donald Trump is doing. He's fixing what other administrations got wrong. Is that a new form of capitalism then? I mean, is that kind of do you describe it that way then? This idea that the U.S. is going to own specific stakes in particularly companies that have particular national security concern or others? That's kind of a new way of approaching things, isn't it? Oh, it's a completely new way of approaching it. But remember, it's not our money. The Japanese have offered $550 billion towards our.
Well, you're talking about those funds, right? I'm talking about the equity investments, but yeah. I mean, you and I have gone back around about this too, and you've said Trump, the president, is going to be able to decide exactly what he wants to do with all that money, the $550 billion from Japan. They've said it's probably mostly loan guarantees for companies that are already operating here that are Japanese companies. I mean, do you feel like you're on the same?
No. We are on the same page. We talk to them. Look, every night and every morning we're finishing the documents, but we are on the same page. What's going to happen is the investments in America are for the benefit of the economic and national security of the United States of America, driven by Donald Trump, the only person who could have come up with these kind of ideas to make sure we protect America is Donald Trump. He understands business. We made Korea. It is their money that's going to create these investments so that we can build the pipelines, we can build the nuclear, we can build semiconductors, we can build pharmaceuticals in America to protect America. This is Donald Trump's strategy, and it is amazing, and it is the most fun to work for him because we are doing things that nobody's ever thought of doing to protect America.
You mentioned you're working on the documents. When do you think the market can get its hands on written documentation on the deals with Japan, UK, Vietnam, Korea? Is that how long ago? How far away is that?
Well, these are kind of weeks away for the Japan and Korea model, but the other models are set. I mean, you already have Vietnam has agreed to open its market. These countries have agreed to open their market. They bring down their tariffs. It's not that you're not going to find a big, long, 250-page trading agreement. It's very simple. Bring down your tariffs to zero. Open the market to American exporters so that we can finally sell our agriculture overseas, finally sell our seafood overseas, finally sell our beef overseas. I mean, our producers have Stockholm syndrome. We've been so beaten for decades that we don't even know what it's like to sell internationally. Finally, Donald Trump is smashing open these markets. The European market won't buy our cars. Korea won't buy our cars. Japan won't buy our cars, but they sure as heck sell us cars. That is changing under Donald Trump. And that is what's so much fun about these trade deals. He's opening their markets for our ability to export, and he's got it asymmetrically. They are going to pay us to sell to us, the great American consumer.
And I know we're going to talk about the $550 billion in the future as well, and certainly looking forward to seeing some of the language around it. Let me come back to the U.S. and sort of the whole idea again of enhancing our competition and U.S. champions. I'm curious, Mr. Secretary, how you view the recent move by Union Pacific to acquire Norfolk Southern, the idea of creating a...
Okay, so we'll move on from that right here. Lutnick essentially making the argument. I don't think he confirmed that the U.S. is taking a 10% stake in Intel. He's kind of being vague around the language that we want Intel to be successful. But he is making the argument that the state interacting with the free market, which historically has not necessarily been as explicit in the United States, at least as it has been in places like China, is that paradigm is starting to switch. I mean, if the United States takes a 10% stake in Intel, by the way, is up 5% based on the SoftBank announcement, which we'll talk about in a second. That would be the state obviously interfering with the free markets. And one could argue the national security implications of Intel warrants the state to do that. But that is how that is how Lutnick is justifying it. And then number two is the 15% tax on AMD and Nvidia. Essentially, Lutnick was like, hey, these are multi-trillion-dollar companies. The government should get a piece of it. Again, an argument that's not necessarily as American per se when you think of capitalism, but I guess this is a new administration and they're thinking of it in a different way. So that's what you have in the context of Intel, AMD, and Nvidia. Now, in terms of Intel, the reason the stock is up 5% is because SoftBank is investing $2 billion in the company. They're getting brand new shares for investing $2 billion in the company. And it seems like the street likes it, not because of the fact that like Intel is going to be some monster when it comes to semiconductors or chips. Obviously, they have a long way to go in terms of getting back to the level of growth that they once had. But rather, it seems like because this is a big vote of confidence from SoftBank on a company that theoretically has done nothing over the past couple of years.
SoftBank is going to pay about $23 a share. Intel tells me just last night it's a, quote, primary issuance of common stock. So that's 87 million new shares, giving SoftBank 2% of the company. And shares are up over 5% this morning because it's seen as a major vote of confidence in Intel, far outweighing any stock dilution concerns. The deal also builds SoftBank's broader U.S. expansion, including the Stargate data center project, the OpenAI and Oracle, and also a recent deal to buy Foxconn's EV plant in Ohio. Intel, like you said, has also had talks with the Trump administration about a deal that could make the U.S. government its biggest shareholder, a potential 10% stake using CHIPS Act funding. Intel wouldn't comment on this possible government investment, but nonetheless, the rumors have been milling for quite some time. But Intel's foundry unit won't break even until 2027. And that's where
So as you can see, they're not going to break even until 2027. Their margins aren't good. They're not growing. They took away the dividend. There's not really any buybacks. Like there's nothing exciting about Intel. But SoftBank giving them $2 billion is basically them saying, hey, we think there's a world in which American manufacturing for semiconductors becomes more important than it is today. The government props up Intel, which is the real reason I think that SoftBank is investing, because they're expecting the United States to meaningfully make sure Intel does not die. And the company wouldn't die in the first place, but now they're kind of ensuring that there's no chance they can die. And as a result to SoftBank, it seems like a decent investment. And so that's why you've got Intel getting some of that momentum. Why Intel and not AMD? Well, the one thing about Intel is they're making more of their chips in America versus AMD. Now, their chips aren't that good compared to some of the other semiconductor companies, which is why they're not getting the type of growth that an NVIDIA or an AMD are getting. But for Trump and his sort of America First agenda, the idea is, can we make chips in the United States? And so it seems like that's why they will eventually be making that investment into Intel. Now, SoFi, we got interrupted by Lutnick, but again, the news on SoFi is that they have officially partnered with Lightspark to bring remittances via the blockchain, so money transfers, to their customers in the United States. Noto says this is going to be very important for having the ability to quickly transfer money at a low cost, and it's a meaningful improvement to everyday financial lives of our users. This will be live, it looks like, by the end of this year. And seems like SoFi is embracing crypto in a more serious way. And that's why that stock is up in the pre-markets as well. All right, so those were some of the stories around SoFi, Intel, AMD, and NVIDIA. Real quick, last thing on NVIDIA right here. We do have some upgrades. Morgan Stanley, they upgraded them to $206 from $200. They say while the near-term bar is higher now, the 12-month picture across demand, supply, and competitive outlook all continue to be very favorable. We remain overweight, and we think they will do $46.6 billion in revenue in July, up from our prior estimates of $45.2. We believe that supply is what matters on the night of the earnings call, but demand is what sets the path into 2026. And they go deeper into saying why they think demand for NVIDIA is not going away anything. But Morgan Stanley is not even the most bullish. You had Cantor Fitzgerald come out yesterday. They said we're raising our price target from 200 to 240, citing Blackwell's ramp as a key AI growth driver. And their estimates for Q2 2025 is $48 billion in revenue. The street's expecting 45.5, so that would be a $2.5 billion increase, and $1.06 of EPS. The street's expecting about 95 cents, so that would be an 11-cent EPS beat on NVIDIA, along with a $2.5 billion revenue beat. If Cantor Fitzgerald is correct and NVIDIA actually puts up $48 billion of revenue, which given the China revenues, I think there's a world in which they could hit that. They would have had $54 billion or $53 billion last quarter, but they lost $8 billion because of the lack of China. I don't know if all of that came back in Q3. I'm probably skeptical. A lot of it's probably going to mature into Q4 and 2026. But if they even got some of it, or they just had increased demand from the hyperscalers, which we've seen Microsoft, Amazon, and NVIDIA and Google have been meaningfully increasing their CapEx, then there's a world in which NVIDIA has a massive beat on earnings. Again, you can see right here, the street's expecting about 46 billion, 45.8, and then about 93 cents of EPS. So, I mean, NVIDIA has already blew through my price target. My price target for the year was 180 based on 450 of EPS with a 40 multiple. I think that 450 of EPS now might be light if NVIDIA can really put up the earnings that is necessary. And given all the anecdotal demand we're seeing across the board, and just like all the different videos and quotes that we're getting from Elon and Sam Altman and Satya, it's just hard to imagine that NVIDIA doesn't put up that momentum. Now, another headline right here on NVIDIA is that they're working on a new AI chip for China based on their latest Blackwell architecture that will be more powerful than the H20 that it's currently allowed to sell. Remember, Trump talked about this last week, that NVIDIA is building a version of Blackwell that is not the best version, but that is a version that could be sold into China. China has come out with reports saying that they don't want the H20 anymore for quote unquote energy and environmental reasons. In reality, they probably just want a better version of the chip. And so they're using this as an excuse. If NVIDIA is able to charge more for the Chinese version of Blackwell and start shipping it by the end of the year, that could also change 2026 estimates, which could be very bullish and exciting for NVIDIA as well. So we're going to see how this plays out, and we'll get some more details on that probably in the coming weeks going into their earnings. Okay, Robinhood's Hood Month is going to unveil their first mystery drop in 2 hours, so I'll probably be live. They have 3 mystery drops. One is in 2 hours. The other one is in 8 days. The other one is in 15 days. So we're going to see that first one in 2 hours. They just launched pro college football prediction markets. Okay, that could also be a reason why the stock is getting some momentum right here. So it looks like the NFL will now turn into a prediction market on Robinhood. And just like the NBA, yeah, there you go. There it is right there, prediction markets. Pro football, and you can see all of the sports teams in the NFL that are listed on the profile. Okay, there you go. Robinhood Derivatives announced the launch of pro and college football predictions directly within the app. So they did 1 billion contracts last quarter. I mean, you got the NFL season coming up. You got the NBA season coming up. You have a lot of sports coming up. Robinhood did say 10% of those were economic contracts. So about 100 million were around like the economy, interest rates, JPOW, all that stuff. The other 900 million were tied to sports, or like the majority of that was sports. It seems like sports is the winner for Robinhood. It seems like people want to bet on sports. So making sure that they offer those sports contracts should be bullish for Hood, which is not too bad. Again, I've yet to trade a prediction contract. I just have not ever done it. I don't know. I'm not that much of a fan of the prediction contract product, but a lot of people love it, and people love trading on it. I have a couple of friends who love doing it. So as a result of that, you're just going to see different verticals of users that are coming onto the platform. And the point is, it makes it more sticky, which is the number one thing that matters for a hoodie. Now, let's talk about Meta for a second. Why did Meta tank yesterday? Apparently, the shorts are piling in. So S3 Partners, which is a firm that does research on short reports, they said shorts are piling into Meta. Its short interest is up $11 billion this year. That's bigger than the next 5 stocks combined, a 75% jump fueled by new shorts and its 30% year-to-date gain. Bears are betting on AI and metaverse spend and tariffs slowing down via ad weakness. As you can see right here, these are all the companies that have had the largest short interest range. Palantir at 2.8 billion, which is a decent amount, but it's just not a substantial amount. Palo Alto at 1.7, Starbucks at 1.8, SMCI at 1.8, and then you got Meta at 11 billion. So is Meta the best short right now? I don't think so, just given the earnings potential that they've guided for and the earnings beat that. I mean, they beat by $3 billion and by $4, or I think it was like $3.50 on EPS last quarter. I think they replicate that going into Q3, Q4, because that's holiday season and that's when their ad sales really ramp up. But if you think they're spending way too much money with no plan, if you think Zucks is being kind of reckless, if you think it's kind of just like Metaverse 2.0, which I don't think it is, but maybe that's what the shorts are betting on, then I guess that would be the short thesis. Speaking of shorts, Andrew Left, the guy who's shorting Palantir, he put out a $40 target yesterday, and I think he put out a $40 target to distract from the fact that he is being accused of conspiracy with hedge funds to manipulate markets and use his media presence and online publications to push misleading stock recommendations while secretly coordinating with hedge funds to profit over $16 million. His pre-trial motion in the Central District of California on security fraud charges happened yesterday. And I think that's the reason why Citron Research put out this $40 target, to kind of distract from the fact that the guy who's claiming that Palantir is going to fall 75% is being accused of manipulation in coordination with hedge funds. So we're going to see if this short ends up playing out. Now, look, in terms of Palantir, again, Palantir from 187 to 171, I just don't have a lot of sympathy for people that are upset about that or sad about that. And I would hope a lot of people also don't have a lot of sympathy, especially if you understand Palantir. The stock got to $430 billion. What, did we expect it to go to 500, 600 billion after that? No, it's going to take a breather. It's going to relax. If it goes down to 150, 140, I'm not losing sleep overnight. I don't care. I'm in this for the long term. If I didn't sell at 20, 30, 40, 50, 170, 190, then I'm not going to sell from a pullback from 190 to 140. And so to me, it's just, I think Palantir is going to chill out. It's going to breathe. It had a great earnings. The fact that it's even staying at these levels is something that I think everyone should be grateful for, because this is the most expensive stock in the entire market. And that's okay for it to be able to just grow into this valuation, keep putting up good quarters. And that doesn't mean that it has to go to $1 trillion overnight. So I think the only bad thing about Palantir going up so much is that it created unrealistic expectations for some people. And if it drops from 190 to 170, people are screaming that's the worst thing in the world. It's unrealistic. It's unrealistic. And so I don't think that is the worst thing for Palantir. Now, speaking of Palantir, they did announce a partnership with Fujitsu this morning, or at least extend their partnership with Fujitsu. So we'll talk more about that after the bell. But that is another commercial client in Japan, which is really good that they are continuing to build out their partnership with it. Fujitsu signed a new licensing agreement with Palantir to drive generative AI adoption and innovation inside of their enterprises. So we'll talk more about that later. But again, Palantir is executing. They can't control the valuation of the stock. But if the valuation on the stock takes a breather, then I just don't think that's the biggest thing in the world. And it seems like that could be happening from this 187 to 170 quote unquote pullback that we've seen. All right, folks, we got 20 seconds. Let's see how this market opens up. Robinhood had a lot of headlines this morning. Again, that 160 price target, 116.30. Let's see if we can get back to 118, which was the all-time highs. But that one is getting some love. We got some SoFi headlines. We got Open Door moving. Tesla's moving a little bit. So let's see how this market opens up. Thank you, everybody, for being here. It is Tuesday, August 19th. The stock market is now open. All right, wake your ass up. Let's get into it. Thank you, everybody, for being here. Tesla, 337. That's up 0.5%. Wow, hoodie. Looks like she likes some of the announcements today. 116.96. It looks like she wants to get to 117 again. We were at 118 last week. We dropped to 107. I kind of thought we dropped to 107 for no reason. There was not any fundamental news outside of algos, but Maybe the upgrade this morning, along with the introduction of football contracts, gets us there. Yep, there you go, 117.30. If we can break above 118 today, that would be bullish because that's taking out all-time highs. That means maybe if we fall back to 116 instead of 107, or at least 115, and we kind of really normalize the mid-teens for Robinhood. So let's see if that can play out on this stock. SoFi right here, 24.74. Again, they launched a new blockchain platform to send money internationally. That one getting some love, up 1.73%. S&P's flat. Palantir's down 1.2. Rocket Lab, that's down 0.2. Palo Alto, great earnings. That's up 5.7%. Not too bad. Tesla, 336. That's green. Open Door. It was at 425 in the pre-markets. Now it's at 393. So it's down from the pre-markets, but it's still up based on last night's closing price. Reddit is down 250 to 236. So that one taking a little bit of a breather. Grab 513, that's up 0.5%. CrowdStrike 433, that's up 1.6. Google 202, that's down a little bit. Nvidia 182. Hoodie 116.74, just down from 117.46. ASML, that's up a little bit, 750. That was at 630. So the fact that that's getting a little bit of a recovery is not the worst thing in the world. Also, Robinhood just introduced SUI, which is another ticker that is able to be traded on the, or another coin that is able to be traded on the platform. So that's another headline we got this morning for Hoodie. PayPal right here, 69.61. Netflix down a little bit. Uber's up a little bit. Lemonade is flat. AMD, that's up, that's down 2.7%. Spotify, that's up 0.5%. Where is ASTS? That is green. Never mind. That's red, 47.65. It's trying to go green, very close to it, but that is flat. BMNR, that is at 54, down 1.3%. Tom Lee did tweet last night that you should expect a pullback on Ethereum back to 4,000 based on their technicals. And so I'll show that in a second. But as a result, Ethereum is up a little bit right here, but you could imagine BMNR will take a little bit of a hit if Ethereum itself takes a bit of a hit. CoreWeave, 95.36. That's 1.3%. Let me check resistance on SoFi for 25. It's at 24.53. It got to 24.70. 25 resistance is 299,000 shares. 299,000 shares. Oscar, did it crack 17? Wow, Oscar. 11 to 17. Not bad. Not bad at all. If you're an Oscar, congrats. That one made a nice move from $11. And really, I think it got the momentum after the big investors co-signed UNH, which is also up a little bit right here in the market open, 309. So as UNH got the co-sign, I think the market got a bit more excited for some of the other insurance plays, and that's getting some momentum. Robinhood losing the majority of its pump. This one has just been unbelievably volatile, but volatile within a range over the past couple of days. It like gets bid up, then gets taken down, then goes red, then ends green. Like last night, it went from like 110 to 114 towards the end of the day. So it looks like they're keeping this one in a range, but that one right there is at 115. SoFi now goes red as well. Palantir, there you go. 3% drop on Palantir, 168. Palantir getting hit the most today, down about 3.2. Again, Andrew left. He is a high profile short, so he might be getting some people to think about this stock in more of a short way. And if you get some negative price action, the shorts start piling in. I mean, that could, that's why I said, I don't know if he's going to be right or wrong, but I do think calling for $40 is a bit aggressive. Nonetheless, you have a high profile short, you might get some more media attention on the name, and that could lead to more people shorting. Now, the question is, when do buyers step in? And that is what ruins a short thesis, right? If you can keep shorting it until buyers ultimately buy the dip. When do buyers buy the dip on Palantir? That is something that is yet to be seen, at least over the past couple of days, since we haven't really seen people come in from that 185 to 175 dip, and now we're at 165 basically. And that is going to be important to see how buyers think of this stock. Palo Alto 188, that's up 7%. Lockheed Martin 440, Grab 514, Open Door, that's above $4. LiDAR, that's up 9%. Then CrowdStrike getting some love from Palo Alto. That one is at 427 as well. You got the entire market kind of going green though as well. I mean, like some individual names are up, but Google's red, Nvidia's red. That's probably why Robinhood just went red, or Robinhood slightly holding its green. SoFi slightly also holding its green just from recovering red. S&P does have a red candle right there. So that one's going down. Where is Meta? New shorts are piling up. Meta continues to go down as well, 760. And, you know, Meta and Palantir are actually similar in the respect of massive companies that had massive moves after massive earnings. They're probably going to take a breather. So Palantir from 190 to 167, and from Palantir 190 to 167, and from Meta basically 800 to 760. It's kind, to me, it's kind of normal for them to take a breather after that big of a gain. The question is, where does the bleeding stop? And for Meta and Palantir that are starting to get a little bit more short interest. We're going to see where the street is ready to stop some of that bleeding if they are. Circle right here, 141. That's green. Missed these down a little bit. MicroStrategy, we talked about yesterday. He is continuing to dilute shareholders. He put out a new notice yesterday, a legal notice that said, hey, I am allowed to dilute essentially whenever I want, which was a bit different from the notice they put out on earnings. And so I think that's why the stock has been kind of in the gutter. MicroStrategy right there, down below 359. Where is Bitcoin? Bitcoin is 115. 115.3. Yeah, all the Max 7s look like they're down today, except, no, Tesla went red. Tesla was green. Apple went red. Google went red. Meta went red. What's the other one? Microsoft. Did that go red? Well, Microsoft's the worst of it because they lost their entire earnings pump. Microsoft was at 580. They're now at 513. Or sorry, 555. They were at 555. They're now at 513. At least Meta was at 700 and they got to 790, but now they're at 760. So there's still an earnings pump that lasted. Meta or Microsoft, not really. So you're seeing some of that momentum to the downside. Intel, is that running? Intel, 7%. That is running. That's up 7.5. The Nasdaq's down 0.5%. I don't think there's any major headlines that's causing some of this pain. We'll see throughout the day. The Trump Zelenskky stuff was not the most bearish, but it is Tuesday towards the end of August. I mean, August has been good so far. Maybe this is when the street decides it's time to take some profits. The one thing that's obvious for why stocks would be having weakness, Oscar, though, up 3.5%, is people are genuinely getting scared about Powell on Friday. Because if Powell does not indicate there is going to be a bullish pivot, UNH right there goes red. I mean, I don't know, dude. September could be ugly. If Powell does not make it crystal clear, or at least somewhat crystal clear, that we are getting a rate cut, I mean, then the waiting game turns into October, November, maybe December, if not September. There's an 83% chance based on the CME Fed probabilities for a rate cut now in September. This is another reason a couple days ago I was like, dude, the gains that we all have, which are pretty damn good, I just want to hold them till the end of the year. Like, I would be very grateful if you know, like all of our portfolios can do even better by December. But just like we've all had a pretty good year, being able to maintain that towards the end of the year, I feel like is the number one priority. Just given the state of the markets and the fact that we've been going up as much as we have, and you might have a little bit of consolidation to the downside. So we have to see if this turns into a real dip. S&P is not really making a move at all. And this is really weird about the S&P as well, because you've got like a Palantir that's down, a Meta that's down, a Microsoft that's down. But then you got the S&P that's down 60 cents. Like, it's not like, which to me signals that the other 493 S&P companies, even if the Max 7 aren't doing well, are the ones that are starting to get a little bit of a rotation, because something needs to be going up for the S&P to not be going down as much as the companies that that are taking up the majority of the index. So like when NVIDIA goes red, the S&P should be affected. NVIDIA is 8% of the S&P, but if some other stocks are helping when NVIDIA is going down, that could actually be a little bit more of a bullish sector rotation, which is not horrible. Yeah, let me pull up the heat map and see what we've got. Max 7 definitely red. Yeah, okay, so you're seeing it right here. It looks like financials and utilities have been the one to actually keep things afloat. Grab is getting a little bit of green. SoFi getting a little bit of green. Let me pull this up right here. Okay, let me give the heat map 2 minutes. I think it's updating. Right now it's showing me yesterday's results. It's saying Tesla's up 1.3%. And Tesla, from my understanding, is not up 1.3%. That is red by 0.5%. Apple just went slightly green. UNH 306. That one's now going red. Bitmine down 2%. Hoodie losing 117, 114.70. Then SoFi losing 24.80 as well. Palantir right here, 167.19. The intraday low on Palantir so far was 166.09. If it breaks that, probably heading lower. If it can stay above it, then maybe that's the bottom for the day. Okay, Home Depot. Forgot to talk about that. They had a rather boring earnings. I mean, they missed on the top and the bottom by a very small amount, so it wasn't a crazy miss. But the number one thing that they pointed out on their earnings is that their fiscal year guidance, they're keeping the same. So they're not taking away their guidance, even though they are citing some of the tariff volatility. They missed on EPS by 1 cent. They missed on revenue by 2%. The takeaway is their growth is good, but their margins are under pressure. That was the biggest thing around Home Depot. Now, the stock right here is up 3%. I think because they reaffirmed their guidance on same-store sales growth, which has been like the biggest fear from a lot of these Wall Street analysts that, hey, wait a second, If these guys just aren't getting people through the door, then that's going to be a deeper issue than their margins. But they reaffirmed their guidance. Their margins is the only issue. And I think that's a issue that Wall Street believes they can work around. The other thing that's important about Home Depot is the housing market, right? Most people go to Home Depot and Lowe's when they're buying a new house or when they're refurnishing their house, and that housing demand has been gone. So on the call today, the CEO was just like, look, when rates come down and the housing market comes back, I think these earnings will look a lot better. But in the meantime, you guys got to cut us some slack because we just don't have a housing market that's cooperating with us, which I think is reasonable. And I think that's fair for Home Depot. Celsius right here, that's up again, 61.39. That is green. Zeta, let's see that. Zeta, that is also green. That's up 1.3%. Yeah, the Home Depot kept their guidance raised at least, which was the good thing. And then where is Open Door? Open Door 391. Got Open Door at 391 on the day. Okay, let me see if I can pull this up as well. These are kind of some of the big movers. We're not seeing a lot of crazy movers right here. Spotify goes green after a crappy earnings they had. Netflix as well, trying to go green. That was up yesterday. Now it's down 1%. Again, that one's been consolidating from 1,400 to 1,200. Grab getting a little bit of a bid right here, 519. That's up 1.75%. So it's getting a little bit of momentum right here. We got to see if it can hold into the 520s, but that is green. 518. And then Tesla, there you go. Tesla finally goes green. NVIDIA also starting to go green. Wow, Intel up 9%. Intel has not had a 9% day and held it for a long time. So it looks like Intel is trying to get there. Okay, so my heat map is not updating, so I'll give it a minute, but it's just being weird. It's saying that Tesla's up 1.39%. That's not the case. So I'll refresh it in a couple minutes and we'll see if that updates. But yeah, across the board, I mean, the heat map that I'm seeing, just looking at some of these stocks, you got financials that are getting some momentum, energy that's getting some momentum, and then big tech is getting sold off, which is okay. Now, Apple goes green and Tesla goes green. So even as big tech gets sold off, I mean, there are people that are ready to buy a little bit of that sell-off. Even NVIDIA trying to go green. Google as well, 202.14, still holding above 200 for the past 4 days, which is not too bad. Palantir, though, that one goes red. There you go. Taking out its intraday low of 166.09, now 165.44. Palantir is down 5%. The FinWiz map is not loading either. I don't know why it's being weird today. Yeah, look at this. It's just not. Maybe the API they use to create the heat map across TradingView and FinWiz is not working. I don't know why they're not seeing it today, but it could be down for all of them. Again, for Palantir, dude, I don't want to sound like a broken record, but dude, it got to a $430 billion market cap. They do $4 billion in revenue. Like I hope every day that we talked about Palantir, at least coming from me, I don't know what you guys watch on other channels, but coming from me, prefaced every comment with, hey, it's an expensive stock. And that means it can take a breather. It is what it is. I just don't have a lot of sympathy for people that are upset about it, because you can't be upset about a stock that is still trading at 390 billion and trading at the multiples it's trading at. Does that mean it needs to go to 50? No. But does that mean it needs to go to 220 tomorrow? Also no. And so I really just don't have a lot of sympathy for it. I'm sorry. But I'm not losing any sleep on Palantir falling 5%. I know it's annoying for people. I get it. But it is what it is. Like, it's an expensive stock. Expensive stocks take breathers. If NVIDIA could have fell 40% this year for no reason, then it's not crazy to see Palantir take a breather after earnings. Yeah, and if you have covered calls, they're printing. If you have covered calls, they're printing as well. So people that freak out about Palantir should not own it. Correct, dude. Like, if you bought at 180 and it's at 160, I get it. You're down $20 a share. But if you bought at 180, I can't help you. Like, if you bought at 180, you had to buy knowing that you're buying something into extreme momentum, and extreme momentum can also lead to extreme downside in the short term. Now, in the long term, I think Palantir will be well above 180 over the next 10 years. But in the short term, you can't guarantee that. And so same thing with Hood. When I bought Hood at like 112 the other day, like, I'm buying it knowing if Hood goes to 100, I can't blame anyone but myself, because Hood's up a lot. I can't expect it to go to 120. I think it deserves to go to 120, but if it ends the year at 110 or 105, I will still be very happy, and I can't be mad at Mr. Market. Now, if Hood was like $40 today, I would be upset because I'd be like, no, this stock is completely getting disrespected. But that's just not the case. That is just not the case. FinWiz doesn't open until after 15 minutes. Okay, that is a good piece of information. So it's now 15 minutes after the bell. That is exactly correct. Thank you for that, June. Now we have the opening map. Here you go. So as you can see, big tech is red on the heat map. That's probably true about TradingView as well, right? No, TradingView is still slacking. Okay, so FinViz is working. What's green, folks, is consumer defensives, which makes sense. People are rotating a little bit into value. Restaurants, healthcare. You got Berkshire Hathaway, that's green. You got financials that continue to be slightly green, and then utilities are green. So you got big tech that's red. Software is actually green today outside of Palantir. Salesforce, ServiceNow, Adobe, Autodesk, Intuit. So you got software that's green, financials that are green, utilities that are green, and defensives that are green, and healthcare that's green. Big tech's red, communication services are red, and then aerospace and defense is red. So that is the rotation that we are seeing, at least this morning, based on some of this price action. Intel 2620. Last time Intel hit 26 was February 14th, 2025. It was at 27.55. So this 10% move is hitting levels we haven't seen since February of 2025, basically 5 months ago. Not too bad. Not too bad. Let me know if anyone has Intel in the chat. PayPal is green. Yeah, dude, we're definitely seeing a little bit of a rotation into defensives right now. Verizon's probably green. You are seeing some of that rotate. There you go. Verizon, 45. Verizon's been 43 for like the past 5 months. It's at 45 today. You are seeing some rotation right there. Look, and Grab could be a rotation play as well. I mean, Grab outside of the United States, growing, lots of cash on the balance sheet. Definitely not as expensive as a lot of the other names that are out there. I mean, it wouldn't be crazy to me to see some people rotate into that one. To me, it's risk reward adjusted right here, given the cash on the balance sheet. And so that could be a good rotation play as well. Amazon right here, 228, and then Reddit as well, 228. Reddit down from 250. So I believe we're having Technical Tuesday today. I'm just warning everybody right now. Jason's probably going to brag about his Reddit short. He texted me yesterday. He was like, damn, we sold Reddit too early. I was like, yeah, we sold it too early. He's like, I'm thinking of going short though. I was like, really? He was like, yeah, I'm going to do it. And he just texted me though. He texted me at 9:42. There you go. So he's definitely going to be bragging about that short today. Look, the guy is good. He doesn't get everything right, but he gets more right than he gets wrong. And at 253, when did he take the short? Yesterday it was 325. He said, can we revenge trade it short today? And I said, you can. I'm not going to do it. I don't know how to short this stuff. But it looks like that one worked out. So there you go. Reddit 227. Reddit's still an amazing investment this year. I mean, this thing was at freaking $100 at one point. So if you're long, I think you hold on long. But at 250, it was getting a little aggressive. And so seeing that take a breather is not too crazy. Walmart right here is up 1%, probably on Home Depot's results. CoreWeave still down 5. Big Bear down 2. They did not have the best earnings last week. Lulu is flat. SMCI down 2. Micron down 1. The solar play is getting a little bit of love based on some of the loopholes in the big, beautiful bill that people are seeing, and they're bidding those up. Novo's up 2.5. Lennar's up 2.1. Buffett did buy more of them, and then Webull is down 3% on the day. Everything else seems to be going red. Nubank's red. Lyft is red. Venture Global is red. AMD is red. All the semis are getting hit. Quantum's red. ServiceNow is barely green. Some of the software getting some love. Broadcom's red, down from 310 to 298. Airlines are slightly green. JetBlue, that's up 2.7. AppLovin, that's down 5%. I mean, AppLovin down 5% makes sense because Palantir is down 5%. The only thing left to go down 5% is Robinhood. Those three tend to trade in a similar fashion. Robinhood is down 3%. There you go. I think Robinhood is getting ready to go down 5%. And then Coinbase is probably down. There you go. Coinbase is down 3% as well. Momentum-driven plays that are high beta, like a Reddit, Robinhood, Palantir, Coinbase, AppLovin, they really do tend to trade similarly. That doesn't mean they're all going to go up exactly the same or go down exactly the same, but when there's a red day, you tend to see all of those go down red. And it looks like that's what we're seeing right now, which also means that you got some algos participating in this market today. Microsoft 512, that's red. Google 201. That is also red. Where is SBET? Are they still trading at 1-to-1? They are now trading below their NAV. They bought another 20,000 ETH this morning, if I'm not wrong. So they bought more ETH this morning. BMNR is still trading at about 1.4 times its MNAV. That stock is down 6%. I said 42 is my level on BMNR. That gets me excited. So let's see. It's at 51. I don't know if we get there. But if we do, I'll probably nibble on BMNR. And again, Tom Lee yesterday posted that Fundstrat's technical team does see a pullback to 4,075 to 4,150 into midweek. And then after, they're saying it kind of fills the gap, it consolidates, and then you should see 5,100, which would be slight new highs from the 4,800 all-time highs. So that's what we got on Ethereum. Would you buy calls or spreads? I would buy the stock. I am not interested in buying options on any stock in this market. So I would just buy the stock. I would not buy calls or spreads. I don't know, dude. I really don't know what to expect in 2026. Palantir right here, 164, new low of the day, down 5.5. And I think if you're buying options, then you're expecting a massive move into 2026, 2027, which, look, if Ethereum goes to the moon, sure, it can, but it's just a little bit too much risk, in my opinion. And, that's the beauty of options. If you take the risk, you get all the reward. I've taken lots of risk on options before. It's led to amazing reward. But on something like BMNR, I would just rather hold the stock and sell calls against it. I mean, the call premium is really good. So I think that's one form of an option versus buying calls that you can do on it. Why not sell some $42 puts? Yeah, that's fair. I would want it to get closer to 42 to do that, though, because the premiums will be better if it's like at 45 versus at 50. Okay, so it seems like that's what we got on Ethereum. Palantir right here, still down 5. Grab holding 2%, 520. Netflix down 2.5, and then Spotify again down a third. Hoodie 112.63, losing a lot of its pump. For Verizon right here at 45. We did get some housing data. Let me pull this up real quick on some of the new homes. So let's pull this up. By the way, OpenAI launched a new plan in India for $4.57 a month. And it looks like OpenAI is really starting to take India seriously. I played that clip yesterday of Sam Altman saying India is their largest market. They are trying to really win in India and offer it for as cheap as possible to get more users in that country. Housing starts in the United States rose by 5.2% from the previous month to a seasonally adjusted annualized rate of 1.428 million in July, the most in 5 months. So you have a 5-month high on housing starts, which is a good thing because the housing market has been relatively frozen. The rise contrasted with market expectations of a drop to 1.29 million and extended the upward revised 5.9% jump from June. So the street thought we would only start 1.29 million houses. We ended up starting 1.48 million houses, which was a nice beat against the expectations. And if J-Powell actually cuts, I mean, there might be a decent amount of demand for those houses. The new home month supply or new home supply for the monthly is now 9.8 months. So there's 10 months of home supply. The average historically is 5.5 months. So you have double the amount of homes that are willing to be sold on the inventory for the supply of homes that are out there in this country. You just don't have rates coming down enough to get people to buy them. And so we're going to have to see how that ends up playing out if we get that rate cut. Oscar, she's making a real move, 1760. Congrats if you're an Oscar. I think that's a play off UNH, and I also think the market's kind of just waking up and seeing a little bit of the undervaluation on Oscar. Again, I don't fully understand the healthcare business that well, but if you took the time to do the DD, you got in around 11, 12, even 13, 14, it's not a bad return. This thing did get to 23, dumped all the way back to 11, came back now to 1765. So you're seeing that get some momentum along with UNH. Figma's down 6%. Figma, I still think is a bit expensive. I think it's been a good IPO, but I mean, I would not be paying $71 today for Figma stock. Oh, we didn't even talk about the headline I put on the title of the stream, dude. We didn't even talk about it. For those that didn't see the news, Chamath is back. There is a new SPAC that he has officially filed with the SEC for called American Exceptionalism Acquisition Corp. $250 million company, 25 million shares at the good old price of $10 back to the SPAC days. And, well, it will be launching over the coming weeks, potentially even sooner than that, as they have filed to find a company that they're going to take public via the blank check of the SPAC and bring it into the public markets. Now, this was the craziest part of the disclosure. It's going to sound like a joke when I read this, but it's not. We believe that this investment is most suitable for institutional investors, and retail investors should approach with caution, if at all. If they do lose their entire capital, they will embody the adage from President Trump that there can be no crying in the casino. That is the official risk disclosure that was put on a audited SEC document around this SPAC being put into the market. Now, I'm not going to lie. I like this because like he's basically telling you, hey, if you buy in and you lose your money, it's not my fault, which at least, you know, if you're gonna screw us over, you might as well be nice enough to tell people. And then if you get screwed over, it's kind of your fault. I really don't have sympathy for people who lose money on a Chamath SPAC because he's telling you, I'm probably going to make you lose your money. Which, to be honest, might be a contrarian play. If everyone hates the SPAC, maybe the SPAC actually does well. Who knows? But the point is, SPACs are back. And my question right here to everybody, which I'm torn on, but are we near the top because of the SPAC? Yes or no? What do you think? I think the answer is no, because the earnings growth is enough to justify NVIDIA, Microsoft, Meta continuing to do well. But I'm telling you, it's hard to defend it. It's really hard to defend it. I've defended this market against a lot of bear arguments that have legitimate claims, but ultimately I feel there's an argument that retorts those bear claims pretty strongly when you just look at the earnings growth and the overall expectations of AI, margin enhancement, etc. When Chamath comes out of nowhere and starts rubbing his hands together, getting ready to use retail as exit liquidity, because we know that's what's going to happen. And you know why I know that's going to happen? He couldn't even get a real bank to sponsor this thing. He couldn't get Goldman Sachs. He couldn't get JP Morgan. He got Santander. I've never even heard of that bank, but that's the bank that's sponsoring this. He could not get a legit company to sponsor this. No company, no bank wants to. No, Morgan Stanley doesn't want to be associated with this shit. Also, this company is a Cayman Island company, so you got another, you got a lot of different rules that will apply to it from a regulatory perspective. Like Figma, for example, I think they're expensive, but they're not a Cayman Islands company. You're buying something in the United States. So it's like, I don't know, dude. It's hard to defend it. It is really freaking hard to defend it. Oh, Santander is a European bank? Okay, so it's not a United States bank. It's a European bank. It's not a United States bank. I've never heard of Santander. But the thing is, look, here's the thing. All of his other SPACs, that still makes my point. All of his other SPACs were done by Goldman Sachs, JP Morgan, and Morgan Stanley back in 2021. So if he's going to Spain to be able to get a bank, that was the most American thing I can say. I was like, what is this bank? Is this bank from freaking Malaysia or something? The point is, if he's going to Europe to get a bank and he can't get the big guys to work with him, to me, that's telling. And to me, that's telling that, hey, the big guys were just said, hey, we do not want to work with you. Of course, I said it wrong. There was no way I was going to be able to say it correctly. Santander. Okay, well, there you go. Yeah, I mean, look, again, I looked at the filings last night for Opendoor, for Clover, for freaking, what is the other one? Virgin Galactic. All of them were led by Goldman, Morgan Stanley, and JP Morgan. They were the underwriters for this. So I think they just recognized we don't want to be part of this, dude, because if this thing goes to shit, all right, Santander can be part of it, even if they're a big bank. But obviously the US banks are much bigger than those banks, and they just don't want to be associated with it. So even if it is a good bank, and here's the contrarian argument, even if it is a good bank and Chamath is able to come up with a SPAC that is like meaningful and it's not a crappy company, there is a world in which he can redeem himself. And maybe Goldman and JP Morgan, et cetera, didn't want to take the risk, but there's a world in which he can redeem himself. I just don't know if there's any amazing company that's out there that if they can't get the money outside of going public through Chamath SPAC, then to me that's concerning, because why do they need this guy to take them public? That is the part that scares me. But regardless, this is the nature of what we have in the markets. 52% of you say yes, we are at the top because of this. So it's still 50-50, which I think is fair. 50-50. Now, again, here's the other question. Can they redeem them? Can he redeem himself by finding a good company to take public? Because, I mean, look, if he finds a SPAC that like goes to the moon and they're profitable and they're a great company and they're underwritten in a way that's not bearish, NVIDIA right here trying to go green, SoFi back above 24, then I think there's a world where like, hey, this SPAC ended up being a good idea. I just, given the history, it's hard to imagine that that actually ends up happening. It's possible Santander is more desperate as Euro growth has been slow. Santander is a bad subprime lender. I know nothing about them. I didn't even know they were from Europe. All I knew is I saw that name and I'm like, here. All I knew in the morning is when I saw the SEC filings. I don't know anything about the bank. I don't know any of their good things, bad things. I barely knew that they were a big bank, but they weren't a elite bank that Chamath has worked with in the past in regards to the U.S. corporations that tend to take these U.S. companies public. And so if he's not getting underwritten with a U.S. bank, to me, I'm just like, okay, like whoever you got to agree with it is fine. But if it's not a premier name, it's because they probably didn't want to be associated with it. And for good reason. Grab right here at 525. That's up 2.84. That is slightly green. All right, so Grab, financials, and utilities are going green. Big tech still going red. Tesla's trying to break out a little bit, 337.90. And Hoodie trying to get back to 115. Palantir still down for the day. Palantir just getting wrecked, down 5.5%. SoFi right here, 2402. Amit, should we give him one more chance, though? Maybe this time he wants to redeem himself. I'm not chasing it. I mean, put in the chat if you're actually chasing it. I do think there is a contrarian argument to chasing this, though, because everyone, like, I've never seen these many people be bearish about Chamath. But everyone chasing it in a bearish way maybe is the reason you buy. I just don't know if it's worth it, dude. He lost a lot of people a lot of money, dude. A lot of people lost a lot of money. Virgin Galactic is down 90% all time. Open Door is down 80%. Clover Health's down 70%. SoFi is the only one that worked, but he sold out of all of his SoFi before it went to $4. He sold out at like 17, 18. Then the thing dropped to $4 and stayed at 7 for 2 years. And now it popped. So I don't know. I don't feel like it's worth giving a chance. Did Elon just tweet about something? Let me see what Elon tweeted about. Oh, well, Elon's been tweeting about this for a while. Okay, so Elon just retweeted, Europe is shrinking. More people are dying than being born. In 2023, just 4.09 million babies were born in the EU. 5.35 million people died. That's 1.6 million more deaths than births in a single year. And Elon said Europe is dying. I mean, look, here's the thing. I think Elon's been right for the past couple of years about this population crisis. Like, we're seeing it in the United States. We're seeing it in Japan. We're now seeing it in Europe based on some of these new stats. We're also seeing it just in terms of people's anecdotal arguments around the cost of living and the cost of having a child and why they'd rather be single than take on the burden of bringing a child into the world if they can't like meaningfully take care of them. I don't know what the solution is to this question. I feel like it is more economic than social. Like, I don't think it's just people don't want to have kids. I think it's people can't afford to have kids as much. And who knows, if AI accelerates, relationships with chatbots, then maybe that makes it even worse. But like, there is a real concern when Elon brings up the lack of population growth in the country, or even, across the entire world. Fear and greed. We are at greed still, 64. Again, S&P is flat. So until the S&P goes down 1 or 2%, I doubt we move from greed. You would have to really see, as last time we were at neutral was August 1st when the S&P fell 1.6%. If that doesn't happen, then we probably stay in the greed part. But yeah, people aren't having kids. Definitely not having kids as much as they were in previous generations. It seems like that is what Elon is highlighting. 113.89 right there on Hoodie. Let's see what other headlines we have. Tesla 338, Nvidia 180, Google 202, then Grab 524. The only headline I saw on Grab yesterday is they're partnering with Thailand, or the government of Thailand, to accept crypto payments in their tourism product. So you do have that going for it. And you just had a lot of other headlines over the past couple of weeks in regards to some of the stuff they're doing with tourism. They invested in WeRide, so the 13Fs, 83% institutional ownership, that's up 2% quarter over quarter. So you have some general tailwinds, but we got to be able to hold at least the 530s, I think, for Grab to get any sense of a breakout here. So there you go. Ryan says, my son just turned 1 and my wife stays at home. The only way I was able to make that work was through the stock market and your show. Thanks for the great content. Ryan, thank you for being part of the show. And thanks for having kids because we need them based on this population crisis we're having. So yeah, thank you for being part of the show. I'm really happy you were able to do it the way you're doing it with staying at home via the stock market. So thank you for being here. Santander. How do you say this thing, bro? Let me ask Google. I offended too many Europeans in the chat by not saying this correctly. How to say Santander Bank. Okay, let's see.
Santander Bank. Santander Bank.
Is that correct? Santander? Santander? Dude, how was I supposed to see like it looks like Santander. Like, how does this Santander? It looks like Santander. Goodness gracious, dude. All right, so how many people bank with them? How many people bank with Santander? How many? What's the ticker on this Santander stock? Dude, the stock's up 116% this year. Holy crap. Okay, so the market cap is 144 billion today, but on January 1st, it was like less than 70 billion. So this thing doubled in the past 8 months. Over the past year, it's up 103%. They went public. Dude, they went public in 1987 at $4. They're up 133% all time. But if you bought them in January, you're up 116% all time. Goodness, dude. That is, talk about a performance year to date that is completely outperformed the rest of the market. And what is this, a Spanish bank? It's in Spain. Is that their, let me see, is that Santander headquarters? Well, okay, headquarters are in, yeah, Spain. There you go. They have an office in New York, but I'm not even going to try to say that. I'm not trying to say that. Boyadilla, Spain. Boyadilla del Monte. Yeah, there's no way I'm going to be able to say that. There's no way. But the point is, in regards to Chamath, if he could not get JP Morgan and Goldman and Morgan Stanley to sign off like he did 4 years ago, and he had to go all the way to Spain to get a sponsor, it just makes you wonder, like, why exactly did he not get the big guys? Amit, do you want kids? Yes, I want kids one day. I would like to have kids. That is my Duolingo thesis. Dude, I've said this before, but I want 2 girls and 1 boy. I feel like that'd be the coolest 3-kid combination ever. 2 girls and 1 boy. That's what I've always wanted. So yeah, I want 3 kids. Because I have a sister, and I'm happy I have a sister, but it would be really cool if I had 2 siblings. But I'm also happy I've had a sister because, like, just, you know, having a sister like teaches you about more things that I don't think a brother can necessarily teach you about. So, like, more compassion, empathy, all that stuff. So I would like to have 3 kids. Granted, can I afford 3 kids? I don't know. You know, we got to see in the future what happens. But people can barely afford 1 kid. So I think that is a rising concern. Palantir right here, low of the day, folks, 163.70. It's down 6%. Getting hit. Noto just tweeted. Let me pull it up. Palantir is taking a pretty big beating today. Yeah, Noto just quote tweeted the announcement with the LightSpark partnership and said it feels like we're just getting started. Look, it's bullish SoFi. It's bullish SoFi. I think it's a good deal. And hopefully we can see 25 on this. The Hood mystery drop has not dropped yet. It should be coming out. Hood SoFi now just below 24 in like an hour. So in about 1 hour, we're going to see. Amit, you have Robin and Palantir. You can definitely afford 3 kids. Can I, bro? Isn't the cost of a child like, what is the average cost of raising a child to 18? Isn't it like 350,000 or something? Yeah, 300. So Google says 375. I feel like it's even more than that, but 375. So you need to have at least 1.1 million in the United States of America. And let's say I don't have kids for like another, I don't know, 5-10 years. Like I'm assuming that price will go up over time, right? So let's call it, it'll be like 450 by then. You're going to need at least 1.5 million to raise 3 kids as per the average estimate, which is kind of wild, bro. That's a lot of money to raise 2 kids. They'll have yes, Robin, the Invest America account on the kids. That's why I need to have these kids. They'll get $1,000 for free. That'll be the bull case. Defaulted Robin. Jose says I pay my babysitter $30 an hour. Dude, see, look, that's and look, if it's a good babysitter, she probably deserves it. But $30 an hour just for, I mean, I don't even want to get into the cost of daycare, dude. This stuff's expensive. This stuff's expensive. And I can understand why there's general anxiety of Americans that can barely make rent or have an emergency savings account that now, have to be told they're horrible human beings because they won't have a kid and they're not helping the population. It's like, dude, if you can't afford to have a kid, it's tough to have a kid. Even Japan has started. We looked at that story like a month ago. Japan is paying people to take a day off from work to encourage them to go out and have kids. Which, who knows if that ends up happening in the United States. Stock draft update. Matt's up 22%. Tanner is up 6.89. I'm up 15. Steve's down 1.39. MSTR and HIMS are really hurting him now. And Chris is now green. Chris is now green by 0.2 as UNH has started to recover. So the order is Matt, Amit, Tanner, Chris, and Steve for the stock draft. And that's what you got. Robinhood right here, 113.78, NVIDIA 180.90, and then SoFi 23.97 is what we have there. I'm in Japan and no one tips here. It's kind of amazing. Dude, every time I pull up to Starbucks and I try to get something, like in the freaking driveway, they put the thing in front of me to like tap my card. But before you tap your card, it gives you the options for tips. And so there's a cashier holding the thing in front of you. They're staring at you. You can't ever find the skip button on the no tips. There's a 1, there's a 2, and there's a 3. And it's almost like they are literally forcing you to hit the 1 or 2 or the $3 to add it to your meal and to give a tip. It's kind of wild, bro. It's kind of wild. And I end up clicking the $1 because I'm like, dude, I don't want to be a dick. This lady's staring right at me. What am I going to like make her wait so I can find the no tip button because I can never find it. And then I'm like, all right, just let's add $1. Like tipping in the United States, and I believe in tipping. I really do. But there's some situations where it's like, dude, this is getting a bit aggressive. Tesla, are we at 340? Tesla is 340. There you go. Tesla, that's up 1.4. That's a 1.5. I don't think there's a headline on Tesla. Tesla just might be technical. Oh, wait, no, there is a headline on Tesla. We have a new car in China that has officially been released. The Model YL has officially been released. Here is a video of the car. It's going to be at the music. But it's a longer Model Y. I think it's 7-seater, if I'm not wrong. Or 6-seater. No, it's 7-seater. And this is particularly for China, where they are more competitive. Oh, no, it is 6-seater. Yeah, 6-seater. And so it's just a longer. The L stands for longer car. As you can see, there are Chinese people in the commercial because they're advertising it in China. I guess that's bullish. I mean, they're competing heavier in China. And so you have a new car that will compete with the BYDs of the world that are, really killing it in terms of affordability. Yeah, this doesn't look like this is going to be in the United States. This looks like this is a China thing. And so that one's getting some momentum. As a European, I do understand tipping in the USA. The lower wage is much higher in Europe than the USA. That's why you need to tip. Yeah, I agree. Look, I am not against tipping. In the United States, we do not pay wages that are adequate for waitresses and baristas, et cetera. Like it's just not part of the structure of those businesses. So it tends to be subsidized via the tip. And I tip pretty often. I tip whenever I DoorDash, Uber, all that stuff. It's just sometimes it's like, dude, you just picked one thing from here to there, and now you're asking for a $2 tip. It's like that's a bit aggressive just on the tipping front. The test right there, 339.70. That's up 1.35%. Palantir continuing to get hit, down 6%. I don't think there's a headline, folks. I think you got high beta names like Coinbase, AppLovin, and Palantir, Robinhood that are down today. And you got some people probably saying, hey, look, the thing about it is when a stock really starts to go down and, there's a lot of gains in it, you got people that are thinking, well, at least let me protect some of my money on the fear that maybe Palantir goes back to 130 and they sell at 163. And it is what it is. Now, they are wrong. If there's enough buyers and Palantir rebounds, they might be right if Palantir actually does end up going to 130. But that psychological element of fear in shareholders that are much short-term than nature, which a lot of people that piled into Palantir over the past couple of months probably are a lot more short-term, is likely leading to some of that pain on the stock right here. Yeah, momentum also goes to the downside. I agree. And you're seeing some of that momentum to the downside right now. Where would you be a buyer at Figma? I don't know, dude. Figma, I want to see one of their earnings first. Like, they have not even had a public market earnings yet. But they were supposed to go public at 33. I feel like 50-ish, 55 is more of a reasonable multiple than paying double the IPO price for. It's not like they're doubling the growth, right? This is just kind of bid up based on excitement. So I would want to see a little bit more momentum on Figma. Intel still having one of its best days ever, up 11% almost on the day. We haven't seen this in Intel in a very long time. But that one is getting some of its green. Palo Alto, again, they crushed it on their earnings. Not too bad. They raised guidance, and they also grew 30% on security ARR. So that's why it's up 4.7%. And then CrowdStrike as well, getting a little bit of that momentum as well. With kids, you're talking soccer games, music lessons, summer camps, and college. Yeah, there's a lot, bro. There's a lot to pay for. I mean, dude, I can't even think about how my parents did it. They were immigrants. They came to America with nothing. They had me and my sister within 5 years, and my dad worked his ass off. And we lived pretty humbly for the first, 17 years in the country. We lived in an apartment, and it was not the best apartment, dude. The one thing I'll remember about the apartment we lived in, which was in Newark, New Jersey, which also isn't the best location if you just look at the crime rate of Newark. Cockroaches. We had a cockroach we were infested with cockroaches, and it was to the point where I was scared to go to sleep, bro. I would go to my mom's room, and I would want to sleep with her just so I could literally be in the bed with my mom and not have to see the cockroaches in my room, because I shared a room with my sister. And once we finally got out of that, I was like, okay, I think that was 2005. We moved away from that. But then the problem is the sofas that we took to the new apartment, unfortunately, they got cockroaches as well. So we had to get rid of those. And so that was the most humbling part about growing up. That was not fun to see. But we had to, because we I think rent of that, but we were probably paying $700 a month in rent during that time. Maybe even less than that. And that's all my mom and dad could afford. My mom was going to college. She had to go get her degree because her degree from India didn't matter in the United States. My dad had a liquor store, and he was just trying to keep that afloat. And eventually we were able to move up, but I couldn't imagine spending that much money on your kids at that time when you could barely pay rent. This is why every time I see a cockroach, bro, I get triggered, bro. Did you know these things can live on they can live for 3 weeks without their head? That's why if we have a nuclear war, cockroaches are the one species that actually can survive for a long time. You can cut its head off and it'll still be able to live for 3 weeks. It is one of the most interesting creatures. And it's always triggered me a little bit when I see them just in a random place. S&P, by the way, goes green. S&P goes green. They fly in South Carolina. Okay, so in New Jersey, they didn't fly. But my goodness, did they multiply, dude? Did they multiply? In the bathroom, in the kitchen, they were just everywhere. I remember it it was yesterday. I really do remember it. Those were things that will be instilled in my brain forever. So I was just why do we have them at every corner of the house? This is getting ridiculous. Now, granted, that entire apartment complex was probably filled with cockroaches, so it wasn't just us, but it definitely was ugly. Apple right here, 232. That's going green. So you got some of the big names going green. AppLovin, 422. That one's still down. Hoodie trying to go green. Lyft, 16. That one's slightly going green. It was at 14 today. Delta, that's up. And then DoorDash, 253. That is also up. Bernstein raised Google to 185. So they raised their price target, even though Google's way above that, but they did raise the price target. And Meta was raised at Bernstein to 900. So you do have a little bit of momentum on Meta as well, getting a upgrade. Okay, here's a couple of clips that I want to show everybody from a new podcast that came out with Dylan Patel, who is one of the lead semiconductor analysts in the market, who actually understands the business models of these companies very well. Here is what he had to say about Apple, which I thought was very interesting. And it's kind of the same argument all of us have been making around Apple, but he goes a little bit deeper into why Apple really could fail if they don't embrace AI pretty soon.
They did mention on the last earnings call they're going to allocate more capital to this, but it's like, guys, Apple, like, you guys are going to lose the boat if you do not spend like $50-100 billion on infrastructure. I think like more and more you'll see people like, you know, great, Apple has this walled garden, but like they can only do so much to protect it, right? IDFA, like they shut down ads to or data sharing to Meta, but Meta made better models and now they have way more data and way more power over the user than they ever did before. Kind of, it was good that Meta kicked the crutch off of them, or Apple did. But the same applies to like AI. Like, yes, they have access to the text and they have access to this, but like, I think other people are going to be able to integrate user data, and agents will be able to integrate all this user data, and they'll start to lose control of what the user experience is as more and more gets disintermediated by AI being the interface rather than touch, rather than, you know, touchpad and keyboard. And I don't think they've truly realized what happens when the interface to computing is AI. Like they market it, but like that's going to shift computing really heavily.
Basically, he's saying, hey, Apple has a hardware moat, but that hardware becomes less important if they can't make any money off the hardware, aka the hardware is just not that exciting. But the AI software that is now interoperable across any agent is not owned by Apple, aka it's not done via an operating system like Siri. If that happens, that's not the best thing for Apple.
Have great hardware, and their hardware teams are working on awesome stuff and form factors, but like, I just don't know if they like get what is actually going to happen to the world in the next 5 years truly well enough, and they're not building fast enough for it.
And then he had to take on OpenAI. So a lot of the critique about OpenAI, which is now at a $500 billion market cap, is that, hey, they can't make any money. His argument is they're going to make a lot of money in the future, but it's not going to be through ads. And this is how most models and agents are going to monetize.
From a business, right? In any other application, consumer app, the free user still pays via ads. But this is not compatible with AI, right? Like, it's a helpful assistant. You can't just make the user's result worse by injecting ads. Banner ads don't really work in AI either. So it's like, how do you now monetize them? And I think they're getting, with the router, they're getting really close to figuring out how to monetize that user, right? Oh, if the user asks a low value query like, hey, why is the sky blue? Just route them to Mini, right? Like, you know, the model can answer it perfectly fine. And that is a chunk of queries, right? But if they ask like, what's the best DUI lawyer near me, right? All of a sudden, this is like, you know, you're in jail, you have one shot, you know, you're like, screw it, let me ask ChatGPT what the best DUI lawyer is. And now all of a sudden, you know, the model's not capable of it today, but soon enough, it'll be able to, you know, contact all the lawyers in the area and, you know, figure out what their results are and maybe search their like court filings and whatever, right? And book the best lawyer for you. This is a much better way of like monetizing the free user. It's like, you know, it's like Etsy, 10% of their traffic now comes from chat, and OpenAI makes nothing off of that, but they really, really will soon.
Basically, he's saying, hey, everyone thinks that ads will be the way that OpenAI monetizes, but in reality, when you need to get something done, OpenAI will do it for you, and then they will take a piece of the pie. So if you need to say, hey, ChatGPT, get me the best flight to California for tomorrow, make sure it's within 6 to 7 p.m. and make sure that I get back 2 days later at like 7 a.m. And ChatGPT just does it. There will be a little fee associated with that. Or if it's not the fee on the user, it will be United Airlines will pay a bit of a fee if that's the one that gets indexed by ChatGPT and their flight agent, for example, to book you that flight. Maybe they take a fee from the hotel to book you that hotel when you're in California. All of that is technically advertising. It's just in the traditional modern era, we go on Google, we type in flights to California, we type in hotels in California. Some hotel or airline pays for the click to show up in front of us. We click it, they get paid, we book through them. Google makes money off that. If an agent does all that for you and the agent takes the fee from the vendor autonomously, that is where you actually have a massive market. And that kind of replaces the advertising model that Google's built on. Yeah, it would essentially be like an affiliate commission. But that affiliate commission happening, a million times a day across 1 billion users, that is a very exciting business model. I think ultimately that's what Gemini is that Google is going to have to embrace, because people are not going to click on the hotel link anymore. They're just going to expect Gemini to find them the hotel. And I think that's how these business models are going to change. The question is, can OpenAI grow into the valuation that they have fast enough to get that business model to make sense? And time will tell. Palantir right here, 163.17, continues to get hit today, down 10.84. That's down basically, call it 30 billion on the day in terms of market cap. And so $3 away from going below the 160s right here on Palantir. But yeah, it seems like this is going to be the new agentic workflow that a lot of these AI models are going to embrace. It might be insider selling. Palantir insiders haven't sold in 2 months, so I don't know if it is insider. I check it every day. I didn't see any insider selling. Last time was last insider sell, July 9th. So about a month and a half. And I don't even think that was a lot. That was 800 shares. So, I mean, it wasn't, we haven't seen, I don't think it's an insiders. I think it's algos, bro. I think if AppLovin's down, Hood is down, Coinbase is down, Palantir's down at the same time. If Palantir was down independent of those four, I would say maybe it's more of a Palantir thing. But if all of the high beta names, Reddit is down today, that's probably a lot of growth is coming down in this market, at least today. And you can see that through the heat map here as well. Big tech starting to recover a little bit with Apple and Tesla, but most of tech and semiconductors are red. Financials are green, healthcare is green, real estate's green, and consumer defensive is green, which is a bit more of safety. Yeah, the fact that Salesforce is green today as well, Palantir is red, that is a little bit of a trade between two of these SaaS companies. Salesforce right here up 1.5. And Palantir is down. JPOW hedging, that's also true. I mean, look, Palantir, Robinhood, Coinbase, AppLovin, these are very volatile, high beta names. JPOW says anything not good. I mean, those could be the names to fall first. So you might have some people saying, hey, let me just take some chips off the table before JPOW speaks. NVIDIA, they took it below 180. There you go. This is everything, folks. This is now everything. Obviously, Palantir is getting hit the hardest out of a lot of these names, but this is pretty much everything. SoFi is getting hit. Hoodie is getting hit. S&P was just green. Like, didn't I say it was just green like literally 50 seconds ago? Now it's red. Grab from 525 to 520. Reddit down 5%. Meta down another 2%. Amazon down 1.2. Salesforce is green. PayPal's green. Verizon is green. And Home Depot is green. But everything got, wow, MicroStrategy. Goodness gracious, bro. 352. Ugly. People are selling MSTR and they're buying Home Depot, which is up 4%. Is this an all-time high? No, all-time high is 439. It's at 411. Well, where's Bitmine? Bitmine is 80 cents away from going below $50. 80 cents away from going below $50. Trump didn't say anything other than stupid and ugly windmills are killing New Jersey. Energy prices are up 28% this year and not enough electricity to take care of the state. Stop the windmills. That is the only thing he tweeted this morning. So unless the market is super bearish windmills in New Jersey, which, by the way, I don't even see windmills in New Jersey. Like, I don't drive up and down the entire state, but I don't see a lot of windmills. I guess they're here, but they're not near me. That is what he said today. Mitt, do you worry about Misty price destabilizing downwards? No. Look, if MicroStrategy tanks, Misty tanks with it. And you have to understand that if you're buying Misty. So you will still get your dividend, right? You'll still get your premium on the return of capital from the covered calls. But if the underlying asset tanks, like if you own MicroStrategy and you were doing calls, which is the alternative to doing Misty, then you would have to deal with the same implication of the underlying asset going down. So therefore your premiums are still coming in, but your appreciation is going down, which is why you kind of have to think of it as a vehicle for income versus like a vehicle for share appreciation. The question is, where does MicroStrategy bottom? And like this thing is down from 430 to 350 in about a week and a half. Is it going back to the low 300s? Is Bitcoin going back to 100,000? Like, I don't think that's the case, but if it is, then that one obviously could feel some more pain. Yeah, if you own Misty, you care about the divvy, not the whole asset value. Exactly. That's correct. Did you see the Strongman Finance video on you? Yes, I did. Someone sent it to me. It was quite hilarious. He was reacting to me talking about Misty. Strongman's a good guy, bro. He's a good guy. I had a debate with him back when Palantir was 7. It's still on his channel if you type in Strongman Emit debate. I had my Al Qaeda beard on though, so just be ready to see that. But he's a nice guy, dude. He does what he does for views. Like, and I get it. Like, he doesn't really have an audience like that. He just went through a divorce. He has to pay child support. He's a CPA, and so whatever he can use to get views to like sell his CPA course or whatever, that's kind of what he does. And I've talked to him personally. He's not like a bad guy. Like, what he's doing on his videos is just throwing on an act. Like, like we were talking about, like, I think he took his kids to soccer practice one day, and I was asking about it. Like, it's like he's a normal dude. He's just on YouTube. He plays a character, and he's probably happy today. Now that Palantir is at 162, Palantir right here down 7%. He also is funny, dude. Like, he is funny. Like, he started rising to prominence back in the bear market in 2022 because he just like made fun of like every financial YouTuber. And so he made fun of me. So I was like, all right, I'll just talk to the guy. So this was me back in 2022. We did a debate on Palantir. And like, if you guys watched the debate, I was just like, look, I know Palantir's at 7, but I think it'll be higher one day. He's like, Palantir will never be above $15. Obviously, that hasn't played out. But he was a nice guy. The last 20 minutes of this debate are us just like talking about life. Like, it's not even that serious. So I've never taken him as seriously as someone. Okay, so Palantir right here still getting hit. Intel still kind of green. And Nvidia, like there's no way Palantir goes green if they're taking Nvidia down 2%. Why are they taking Nvidia down 2% or AMD below 170? I actually don't know. AMD is getting hit worse, down 5%. Is it because of Intel? I doubt it's because the government's investing in Intel. Like, that's fine, but that's not bearish AMD or Nvidia. But in the midst of Palantir down 7%, which is in the S&P 500, AMD and Nvidia down 4 or 5%, which is in the S&P 500, the S&P 500 is up 5 cents. It just went green. Like, this is actually, as annoying as it is to see some of our growth stocks get hit, you've got a lot of parts of the market, as we can see on the heat map, that are doing well. And I'm willing to take the pain on the growth stocks going red to just know the market's broadening out. Like, I genuinely feel like that's a good thing for the health of this market. And I would imagine other people feel the same, even if it's annoying that Palantir, Hood, Coinbase, etc. are down. Seasonal weakness was due anyway, yeah. And we've avoided it for basically 3 weeks. And I don't know if we're going to keep avoiding it. I don't know if this is just a one-time blip today, but I'm not upset that Berkshire Hathaway, Visa, JP Morgan, Walmart, Costco, Coca-Cola, Exxon, Johnson & Johnson, Home Depot are catching a bid, and Palantir, Nvidia, AMD, Broadcom, Amazon are getting hit. Like, they've outperformed more than enough compared to the other names for them to take a breather. So it doesn't feel that scary. I'll put the link right here in the chat. This is FinWiz. This is a website that shows the heat map. TradingView does it as well. But yeah, there's the link for anyone who wants to see it. Okay, UNH down on a day like this. I agree. That is kind of weird. UNH down on a day like this is kind of weird. 304.39. That one, that is actually very weird. UNH should be up with the rest of the value plays. The fact that it's getting not dumped, but the fact that it's not up on a day where Palantir is down 7%, I mean, you would think this would get a bid. You would think people would just pile into A, defensives, B, healthcare, C, deep value, which UNH is all three of those. Even if you hate the company, you can't undermine the fact that it is a defensive healthcare play that, if you just look at the pure multiples on this thing, it's cheap. So getting sold off right here is very confusing. But that one is down almost 2% today. So that's what we got there. Prince, thank you for the $10 super chat. Admit, I believe Rocket is going to be one of the best beneficiaries in the coming refinancing era. They're becoming a silent behemoth while implementing AI. Yeah, I think the Rocket thesis is sound. I'm not in the stock, but I do think they will do well. I've heard the thesis a couple times over the past year, or at least over the past 6 months. I think it makes sense. I would rather buy Rocket over Open Door if we're talking about playing the rate cut environment. I mean, I feel like Rocket actually has like a trajectory to gain momentum based on the rate cuts, whereas Open Door, again, for those that were with me on the market close yesterday, we listened to Eric Jackson point blank get asked, what does he mean by Open Door needs to embrace AI? Because his whole thing is like, hey, they need to replace the CEO and embrace AI. And the dude said nothing, bro. When I mean the dude said nothing, I mean, like, I have been asked by my teacher in high school about homework that I didn't do, and I was able to better articulate answers to the homework that I didn't do versus this hedge fund manager who could not explain what he means by Open Door embracing AI. He was like, oh, well, they can use AI to make the inspections of the houses better and make the process more efficient. It's like, what? What does that mean? How does that increase the gross margins? How does that increase productivity? The only point he had is you can use AI to cut a lot of employees, which is fair. You could cut a lot of employees via AI, and then boom, that could somewhat help your margins. But I mean, if the bull case is, let's get rid of a ton of employees, then okay, it's not my favorite bull case. So I just don't see what they plan to do. And Open Door right here down about 4% after being up 15%. So I'm not buying it, but I think Rocket or Zillow would be a better rate cut play versus the Open Door. But it was just weird, dude. We listened to it for like 20 minutes. We gave him the benefit of the doubt. We wanted to hear what he had to say. I was very curious because I'm like, dude, if there's a real thesis that I'm missing, I want to hear it. And I think a majority of you agreed with in the chat, like, this guy's just saying bullshit. It really sounds like he's just pumping it for the hell of pumping it. Like, it really does not sound like there's any thesis here at all. Like with Grab, I know it's not as volatile as Open Door, but when I articulate a thesis, there's a real thesis. I can actually talk about how they're building, how this could be a $100 billion company. This guy's claiming for $82. He claimed yesterday it should be $56 before rate cuts. I'm like, what like he must be seeing something that none of us, or at least that I don't see. Because when I listen to him talk about it, I get nothing. I really don't get much. CNBC's talking about Tesla. Okay, let's see some of the Tesla coverage we've got today. Let's pull this up.
By the way, I think Secretary Ludnick's response to you on Intel feels a lot like our note this morning. We've definitely hit a nerve here in terms of just sharing our experience. But we were down in Austin last week, trialing the the robotaxi, which is a beta version, comes public in September, and we also trialed Waymo through Uber. And our experience was surprising. I mean, the Tesla drove much more autonomously, felt a lot more like a person was driving that. It was a very comfortable. There were no security, safety issues that we had in any of our rides, and it surprised me to the upside. I was pleasantly surprised by this experience.
Yeah. Well, what were you expecting? I mean, I assume you've ridden in Waymos and the like. So, I'm just curious what your expectations were. And then talk about pricing for me, because I know that also is something you've noted.
I was expecting something that was more like Waymo. And for us, I've taken many Waymo rides. It still feels somewhat robotic, when you are entering a intersection or taking a left, that you can almost, it feels as if the computer is thinking, is it sensing things out, which it is doing. Whereas the Tesla, which the stark difference is Waymo uses LiDAR and uses laser in addition to cameras and vision, where Tesla is a vision only and using its neural net much more like a person. And that it just felt more normal. Now, we've always said, the risk for Tesla is, can they use their expansive network and the training that they're doing in their system to then get to a safety that is similar to that of what Waymo is doing? And if they can, then the tech stack, the cost is much lower. And so we calculate it's about 1/10 that of Waymo. And so can they use the lower cost to weaponize pricing as a way to take market share? Because they are, the David in this market. They are the newcomer into the market, and so they need to be the disruptor. And their pricing was half that of Uber, just in the small sample set of experiences that we had last week.
You said at the outset that your report hit a nerve. I'm just curious, what kind of feedback have you gotten to say that?
I feel like I came up with 6-minute abs and something about Mary, that people have been led to believe that, that it has to be, fall into this camp where you have to have LiDAR, or, and vision's not going to work, or you kind of fit into that, vision model. And the two don't seem to talk to each other. It's two.
I think over the next 5 years, we're going to get a much more accurate understanding of what self-driving looks like. But I think every analyst trying to analyze it right now, it's also in its infancy. Waymo's in their infancy. That's probably why it doesn't feel the best. Tesla has barely unveiled robotaxi to any meaningful amount of demographics. And so, by the way, I got banned from FSD yesterday, bro. I told you guys I had strikes. I checked my phone yesterday, right when I was pulling up to a red light. Boom. She turned off. I can't use FSD for another week, which is okay because I'm going to be in Miami this whole week, so it doesn't matter. But she banned me. She's like, hey, you're not allowed until August 24th. And I'm like, bro, this is when the AI takes control of you. I was like, goodness, bro. Dude, the sunglasses don't work anymore. I was talking to a friend yesterday. He was like, dude, the sunglasses do not work anymore. He's like, I have the latest model. The sunglasses, they can tell through it. Realistically, you just can't use your phone, bro, ever. You can't even go to check it. Like you get the freedom of not having to drive, but you cannot do anything else, which I understand why people would say it's useless then. Because theoretically, look, there is a lot of value to not being able to have to worry about the drive. I still feel that. But if I can't do anything, like, come on, bro. That's like the whole value proposition is that I can at least do something while I'm not driving. Seems like that's at least at minimum a year away, if not 2 years. Yeah, it's not banned. It's more of a timeout. Like on FSD, if you use your phone like 3 or 4 times and they give you warnings, it's like 3 strikes and you're out. I think it's like 5 strikes and you're out. I got my 5th strike yesterday. So I have a week to wait. Doug says, I'm in the early access of the new FSD, and in the new one, you can pick up your phone for a few seconds. Yeah, see, that's not full FSD, but I had to drive somewhere like 50 minutes yesterday, and I didn't have FSD. So like I was more annoyed at having to actually drive those 50 minutes because I'm so used to like not driving. And that's where I see the value of it. But then in the middle of your drive, if you want to even check your phone and it becomes this authoritarian dictator that says you can't ever check it, it really does get annoying when it comes to FSD. Hoodie, she's getting dumped, down 5%. Palantir, new low of day, 161.20, down 7.3. Grab from 520 to 514. App Lovin', that's down 7% from 445 to 408. And Coinbase is probably down 3%. Coinbase is down 4%, 308 on Coin. Did we hit the top, folks? Did we hit the local top? Is this when we actually feel some August pain? Is this when we feel it? The grinder notifications can't wait 15 minutes. Dude, just press the brake before you use your phone. Dude, trust me, I've done that. I've done that many times. But like last night, I forgot. Usually if you press the brake and then check your phone, you're good. But last night I forgot. I just picked up my phone and then boom, 5th strike and I was out. It is what it is. I'm not even going to be driving a lot this week, so I'll get it back next week. But it is one of the annoying parts about Tesla. All right, what do we think? Let's do a poll. Short-term top It's so ironic, dude. The day after Chamath launches a SPAC, we get into this freaking... It's a pretty ugly red day. Not on the S&P, but on the rest of the market, which is, again, bullish because the rest of the market is rotating. But short-term top, yes or no? What do we think? What do we think? HIMS as well, down 4%. The Qs down 1%. Like, the Qs are down 1%, but the S&P is down 0.2%, which means, again, this is a tech-heavy drawdown, not really a market drawdown, which, again, to me is bullish because it's not the whole market. SoFi, is that getting hit after their blockchain stuff? SoFi, yeah, SoFi down 4%. The other bullish thing for those that, are upset about Palantir, it doesn't seem like it's a Palantir thing today. I mean, I know Palantir is down, but every high beta growth name is down. At least 5%, at least 3%, most of them 5%. Palantir and AppLovin around 7%. So it seems like it's more so an entire growth. You could call it drawdown, I guess. Momentum to the downside. Even NVIDIA, 177, down almost 3%. NVIDIA was at 184 last Thursday. Yeah, even Googs and Amazon are getting hit. Googs is at below 200. Googs is holding on to 200. And then Amazon was at 235 yesterday. Amazon's now at 228. Oscar was that was at 1750. Oscar's now 1670. Even Oscar not able to hold on. Even Grab couldn't hold on to the gains. Like, a lot of these smaller names cannot hold on to the gains if NVIDIA falls 3%. CoreWeave getting wrecked down 5%. Where's Nebius? Is that holding 70? That is 67. Wow, Nebius down 7%. 73 to 67. It looks like today might be a little bit of some downside. Now, what would be very funny is if by the end of the day we recover, or by tomorrow we gap back up. And it would prove the argument around resiliency again. But I kind of don't think that would be healthy, dude. I kind of think, look, if you're going to give us a drawdown, it should probably be a drawdown that continues to just consolidate. Hopefully it doesn't go further down. But gapping back up tomorrow randomly, I don't know. It would feel a little bit more manipulative with the algos. Now, granted, Powell is speaking on Friday, so maybe that's the reason why growth stocks are selling off, but I don't think it's the most bearish thing in the world for them to stay at these levels. But we are seeing some of that pain. Archer, Archer, Big Bear, dude, those guys are going to get hit if NVIDIA's down. Archer is what? Palantir's just filling an earnings gap. That is also fair. Archer is down 4%. There you go. Uber's holding a little bit. Nebius already had earnings. They had earnings last week. They crushed it. But stock is getting hit today. We have to go down so we can continue going up. Don't forget, this is August. Yeah, dude. Also, again, the other reason it's healthy, it's like if you expect a Santa Claus rally, you usually have to go through some August, September pains. Like, that's just inevitable. It's just we've avoided the August pain for 19 days until today, which if you compare us to where we were July 31st, we are still meaningfully higher than where we were, not only on the S&P, but on a lot of individual names. But, maybe we don't avoid it for the rest of the week or for the rest of the next 2 weeks of August. And I don't think that's horrible. As long as J. Powell doesn't get hawkish. Now, Tom Lee just tweeted about his expectations for Powell. He said, in convos with institutional investors, more of them expect Fed Chair Powell to lean hawkish as he doesn't want to be concerned to cut. Because this is the base case, probabilities favor his statement to be viewed as dovish, meaning stocks will likely rally post-Jackson Hole. Okay, so Tom Lee is saying stocks go up after Jackson Hole because the base case is that he's going to be hawkish. And if there's any chance of him being dovish, as stocks are already taking a hit based on the potential feeling that he would be hawkish, then you would get a rebound. So Tom Lee's argument is we probably see some momentum to the upside, even if we get a hawkish shape out. All right, we're going to have to see. We're going to have to see. 70% of you say yes, this is a short-term top. 70% of you say yes. For those asking what's tanking the market, there is not a headline I can give you. There's nothing I see that would be easy to point to. It really just feels like sector rotation today. which is the reason. Why September cut at 83% if base case is hawkish? Well, remember those Fed probabilities change very quickly. I mean, this thing was at 100% before the PPI came out. So if J-Powell sounds hawkish, then the 83% will turn into a lot lower than 83%. But we're gonna have to see, what it ends up turning out to look like. And I don't know, dude. I really have no idea what Powell's gonna say. Let's do another poll right here. Do you think Powell, ETH under 4,200, do you think Powell goes hawkish? I want to say no, but I'm he saw those PPI numbers. Although he saw the labor market numbers, is there a world where PPI matters more to him? Now, Goldman Sachs, I think, came out with a study today, and they said they expect another jobs revision to come out, and that's going to be even worse than the 250,000 job revision before that we got a month ago. I don't know if the BLS will release it because I don't know how the BLS is thinking of it, but take a look at this. So this is what Goldman posted today. They're expecting a revision from 550,000 to 950,000 jobs over the past 12 months, which would mark the largest 12-month revision since 2010. That would mean that jobs have been overstated for the past 12 months by 45,000 to 85,000. Now, ironically, if this happens, J-Powell is definitely cutting. In fact, we're probably going to do 50 bips. I don't know how you see 1 million jobs get lost and not give us at least 25, hopefully 50. But B, if we do have that big of a revision, what does that mean about earnings growth? Because earnings growth has been spectacular, to say the least. If you get a revision, does Q3 lower the expectations for earnings growth, which then lowers the expectations for multiples, which means multiples compress, even if you get rate cuts? That is the nuance to what is going to take place once we get this new BLS revision. And the other question I have is, are we even going to get the BLS to put out a revision? Because now they have a new director, and what if he's instructed to just not put out that? I mean, he already flirted with the idea last week of getting rid of the jobs reports for the coming months until they re-architect how they count the jobs. So if he doesn't release that data, I guess the market doesn't know, but that's worse for J-Powell then, because you don't have that data to justify giving you a cut. These numbers come out, I think the first week of September, we get the revisions. Yeah, the first Friday of September. So that's when we're going to see. So in about 3 weeks, which is right before the September 17th FOMC meeting. That is going to be something I think we really, really got to pay attention to. Modi just posted on X. This is India's prime minister. India-China relations have made steady progress guided by respect for each other's interests and sensitivities. I look forward to our next meeting on the sidelines. Okay, so one of the things about Modi, or about this India thing, is that Bloomberg reported yesterday that India and the U.S. have called off their August 25th meeting for negotiations. And it looks like it makes sense for why Modi's tweeting good things about China and Russia, not the United States. Here's what Besant had to say this morning about India.
I know part of what the administration has done has tried to make it tougher for Russia to be able to sell its oil. It cracked down pretty tough on India, which is importing a lot of Russian oil, but not so much when it comes to China. Is China in the wrong for importing so much Russian oil as well? I think they import just as much as India does.
Oh, well, let's go back and look at the history, though, Becky. And China importing it is suboptimal. But if you go back and look pre-22, pre-invasion, 13% of China's oil was already coming from Russia. Now it's 16%. So China has a diversified input of their oil. If you go back and look now, I believe India had less than 1% of their oil, 1%, and now I believe it's up to 42%. So wow. India is just profiteering. Or they are just profiteering. They are reselling. They made $16 billion in excess profits, some of the richest families in India. So this is a completely different thing. This Indian, what I would call the Indian arbitrage, buying cheap Russian oil, reselling it as product, has just sprung up during the war, which is unacceptable.
So that, I mean, look, Besant talking the way he's talking kind of gives some credibility to the Indian-U.S. talks stalling in regards to trade deals. Yeah, there was this India Apple headline this morning as well. They're increasing manufacturing of the iPhone, which is good for Apple to diversify from China and not have to deal with the tariffs. But I don't know, dude. I think we get a deal with India. It's just, it feels like India is choosing to work with Russia and China more than the United States right now. And look, from their perspective as a sovereign nation, they want to get cheap oil. They don't get cheap oil from the US, they get it from Russia. They kind of don't care about the Russia-Ukraine war because they've got 1.4 billion people to give energy to. And so I can understand that perspective. On the contrary end, I don't think being buddy-buddy with China and Russia is the best thing in the world. And I don't think the U.S. is demanding India to not buy any oil from Russia. I think they're just asking them to diversify and do more with the United States. Given India does have, and this is what Trump is 100% correct on, the highest tariffs out of any country on the United States. Now, we don't do a lot of trade with them, which is kind of Trump's point. It's like, hey, we don't even do that much trade, so why are the tariffs so high? But regardless, India is going to get cheap oil if they want cheap oil. And they're not easily going to capitulate to the United States. So I don't know. I think we still get a deal done. I think there's just two powerful countries that have to get a deal done eventually. But, you know, the timeline on that does seem like it is getting delayed further and further. So we are going to have to see. AMD, that one getting hit, continuing to be red. Again, there's not a headline to point to today. This is just the market taking a red day on the chin. And as I say that, the S&P is down $1. So it's not really the market, but it's individual stocks in the market that have done very well, taking a breather. Meta from 796 on Friday to 754. I mean, it's taking a breather. Palantir, 190 to 162. It's taking a breather. And I don't think it's the craziest thing in the world, but you do have a lot of these names that are getting hit. Circle right here, 136, dude. Circle. This was at 185 last week. It was at 298 3 weeks ago. This one definitely getting hit. And then AppLovin from 450 to 412 right now. And Microsoft, yeah. Microsoft losing all of its earnings pump. Yeah, I saw what Saylor did to his dilution rules and relative to MNAV. I mean, look, that's typical Saylor, right? He does not care about dilution. He will continue doing whatever he wants. And that's why MSTR is getting hit. I mean, dude, MSTR at 340 when it was at like 450 2 weeks ago. It was not in my playbook after Bitcoin hit an all-time high. But Saylor needs money to buy more Bitcoin. Speaking of toppy markets, so Arnie made this point to me a year ago. And he said, I think the markets will top when Databricks decides to go public, because you know they're going to go public at a crazy valuation. And here you go. Databricks is now raising funds at $100 billion valuation. This is not even going public. This is in a private round, which means when they go public, we're talking about well over $100 billion. Less than a year ago, it was valued at $62 billion. Now, look, Databricks, Arnie was kind of joking when he said it was toppy because, you know, in general, Databricks is an interesting company, but it's not a company that he thinks is the most exciting when it comes to AI. Databricks is still a really good company, though, and they're growing fast. So if Palantir can get a $400 billion market cap, yeah, Databricks can probably get a $100 or a $150 billion market cap, probably even way more than that. But the fact that that money is out there ready to invest as easily as it is, it does mean, and then you got the whole Chamath Spac stuff, it does mean you have more liquidity. And that liquidity obviously is not going away anytime soon. Now, Databricks was actually going public. If this was not a private round, then I would think things are getting a little interesting. Because, dude, for that company that has already been one of the most expensive software startups to go public, and I know Palantir is expensive as well, but it means that they see a very good opportunity for people that are willing to bid it up. And that just means there's a lot of money out there. Same thesis on Chamath. If he couldn't get a U.S. bank to underwrite the IPO and he had to go to Europe, it's because he's desperate to say, hey, this is the most opportunistic time since 2021 to get into the public markets, get people to put up money for whatever asset I can get endorsed by whatever bank is willing to endorse it, and be able to make a lot of money off it. Again, Chamath, during the SPACs in 2021, this guy used to make like $100 to $200 million per SPAC in the management fees, or sorry, the sponsor fees alone, much less the management fees, which was a separate fee on top of that, just by taking them public. The one thing I'll give him credit for is if you go deeper into the SEC filings on what Chamath put out yesterday, he only makes money, or he can only sell if the shares are appreciated at least 50% above the price of the SPAC, which is a good thing, right? It's not like 2021 where he could just sell whenever he wanted. Like there's actually a condition here. But if there is so much liquidity and we see, companies go public and they go up like 200%, like he's going to get his 50% very easily. What if he dumps within the first week of the stock being up 50% just based on the pure amount of momentum that's in the IPO market? And I think that could be one of the concerning things about this. BMNR goes below 50. There she is, 49.85. 49.85. Wow, Bitcoin below 114. Dude, everything today is taking a hit. 113.9 on Bitcoin. Is there a site where we can see the updated MNAV? I would just divide the market cap by the amount of Bitcoin they have. So BMNR has 6 billion, if I'm not wrong. So the market cap is what? 7 point something. The market cap. That's at least the easiest way to do it. Market cap's 8.7. So 8.7 divided by 6. They're trading at 1.45 times their net asset value right now. What stock is getting hit the worst? I think it's Palantir and AppLovin. Let me see. I think I can get the exact top loser. No, sorry, it's Viking. This therapeutics thing is still down 45%. It was down 35% in the pre-markets. Figma is actually worse than Palantir and AppLovin. That's down 9%. And BMNR is actually down 9% as well. So BMNR, Figma, and Viking Therapeutics, they are the worst performers of the day. The Robinhood mystery drop, I don't think is live yet. Let me see. Has it launched? 58 minutes. It's going to come out in an hour. So we'll see in about 58 minutes what that looks like. I am down $64,157 today. It's a fun day. It wasn't as bad as the $94,000 down day on August 1st. So even though the S&P is flat today, I'm still down a ton because I'm in a lot of these other high beta names, but it's not as bad as when the S&P was like, thank goodness the S&P is not down 1% today, because if the S&P was falling with Palantir and BMNR and Nvidia and all these, then we would really feel some pain. Like right now, we have not really felt pain. If you're heavy in Hood and Palantir and AppLovin, like you feel some pain. But if the S&P were to go to like 635, then we would see some real pain. You're talking about Hood under 100. You're talking about Palantir probably in the low 150s. You're talking about Tesla at 300. You're talking about Nvidia probably at 167-ish. Like we would see some real pain if that were to happen. Rock Lab as well, getting smoked. Rock Lab, there you go. Down. Wow, that's $1.70 away from below 40, dude. This thing has not gone below 40 in almost 2 months. So that one potentially could get hit. Duolingo as well. That was up a little bit in the pre-markets. It had a 14% day yesterday. That one's down 6. There's no news for why everything is red. I wish I could give you a better update, but I do not have a reason. Well, who's buying the dip? That's the who's unleashing some of their dry powder. I did buy the dip last week, by the way. I bought 10 shares of Hood at 107, and we're still not there yet. So I did buy the dip. I did buy some Grab yesterday too at like 508, 509. So I don't know. I feel like we got to get much worse prices to get really excited, but I don't think it's crazy to buy the dip here. Let's get a little bit of an update on Intel as well after that Lutnick interview that we got this morning.
American taxpayer, and the answer is we get an equity stake for our money. So it would seem to me that he made it pretty clear that is certainly under consideration, if not moving forward. When I asked the question about whether the U.S. would also get any governance along with that 10% stake, here's what he had to say. Do you get governance here? By the way, once you're in for 10%, do you have to go in for even more?
No. Come on.
No, what?
Come on,
what?
stop that stuff. It's not governance, right? We're just converting what was a grant under Biden into equity for the Trump administration.
I get that.
I
get that. I just asked if you're going to get governance. You're going to own 10% of the company. You don't. Why? Why wouldn't you want
non-voting,
some
non-voting?
Okay.
No, stop. Don't overdo it.
He didn't like
funny,
that.
Listening to it, I didn't realize. Yeah, I guess I had to stop. But it's a fair question, of course. There.
It is a fair question. It's a very fair question to say, hey, if you own 10% of the company, do you get to determine how the company runs? But Lutnick vehemently denying that, which is, he probably doesn't want to be seen as a government that ends up telling companies what to do. But regardless, it looks like they are trying to get deeper into some of these semiconductor plays. Robinhood right here, 109.89. S&P, BM&R still holding 50. S&P right there, 641. Now you do have the S&P showing a little bit of weakness, down 1/3%. That's not much. That actually cracks down to that 0.7, 0.8% down, then you're closer to 1%. And then we're going to get a better understanding of how this could play out. Let's get an update on Home Depot earnings as well.
Carl, yeah. So despite missing the street's expectations for earnings and revenue for the first time since May of 2014, shares are higher on the reaffirmed guidance for the full year. Comparable sales also disappointed slightly, only the second positive comp in 11 quarters, though sales did continue to get stronger each month of the quarter. And McPhail just said, the CFO on the call, that the momentum has continued into the first 2 weeks of the current quarter. CEO Ted Decker told analysts on the call that it was the highest comparable sales for the highest number of departments in almost 2 years. Now, McPhail told me that the biggest home improvement projects are still being delayed. The retailer is unsure when or what will push those projects from delay to start, or alternatively, being canceled altogether. But on the call, Decker gave a little more insight.
The number one reason for deferring the large project is general economic uncertainty. That is larger than prices of projects, of labor availability, all the various things we've talked about in the past. By a wide margin, economic uncertainty is number one.
Now, Home Depot told me that most of its inventory did come in before the new tariff rates went into effect for the quarter just reported. With Home Depot reaffirming guidance for the second half because of that accounting method, it is possible that they could see profit propped up. Carl, back over to you.
So again, the same story. Margins are getting hit, but same-store sales and guidance was reaffirmed, which is why I think the stock is getting a bid along with growth selling off. So some of the value coming in. Home Depot having one of its best days of the year, up almost 4%. But the rest of these names are taking a bit of a beating. Intel, is that green? Intel is still up 7%, even though it was up 11. Misty getting wrecked because of MicroStrategy, 1697. That's now below 17. Down about 5% on the day. All right, so I think this market could be some of the, this could be bad pain today, but if the S&P holds, call it 639, 640, maybe it doesn't get that bad towards the end of the day. If we lose the 639 and we kind of go back down to that 637, 635 range, which is where we recovered from the August 1st lows of 618, then we're going down a lot further. Grab's going down, AMD is going down, everything's going down. So I think the key level right there is, do we break 639 to the downside? That would be like officially down about 1%. This is where covered calls print. Yes, I saw this headline this morning as well from Business Insider. U.S. bankruptcies surge past the 2020 pandemic. I think there's a lot of reasons for bankruptcies. I don't think it's just like a bad economy. There's a ton of different variables to how we think of bankruptcies in general, but that is a headline that there are more bankruptcies now than there were a couple of years ago. The nuance about the bankruptcies, though, is like a lot of these businesses don't have a lot of revenue or don't have a lot of employees. So it's like when you think of a bankruptcy, you think, oh my goodness, this company went out of business, everyone loses their job, blah, blah, blah. Like, well, that's when a public company files for Chapter 11, because if you become a public company, you have enough momentum to have enough employees and revenue, and it's like a meaningful impact on the economy. If you're some pizza shop or like you tried to start a pizza shop and you had like 2 employees and then you couldn't make it and you had to file with the state of California that, hey, we are going bankrupt because the pizza shop is not profitable. Like it's not the best piece of news, but it's not like, oh my goodness, the economy is collapsing. And so I think the quality of bankruptcies is also really important. A lot of people also start an LLC and they never end up like doing anything with it. They just started as a side hustle and never becomes a thing. They never hired a single employee. They never made $1 of revenue. And then they have to quote unquote file for bankruptcy and close it. And so it's not as indicative as a stat as I would think. But if you see big brands filing for bankruptcy, yeah, exactly. Like these, Forever 21, Rite Aid, Party City, those are more indicative of like retailers that have to go out of business. And quite frankly, that to me is not that is not an economy thing. That is like, dude, people are just not shopping at Forever 21. They're going to H&M. People are not going to Rite Aid. They're going to Walgreens. People are not going to Party City to buy their balloons on their 4-year-old's birthday. They're going to Target and Walmart. And so a lot of the consolidation in the retail space, I think, just comes from pressure on margins and the big guys being able to essentially offer way more products than before. Do you guys know this stat? Walmart offers 140,000 products. Costco offers 3,100 because Costco is so selective with the amount of brands that they can put on their shelves. But Costco is still the third largest retailer in terms of dollars of revenue. Walmart is number 1. Amazon's number 2. But Walmart has 40 times more the amount of different things they offer inside the stores. And so you think about it like a Rite Aid or a Claire, and Walmart does pharmaceutical stuff, right? Like those, it's really hard for that. I mean, Walgreens barely has done anything, even though they're still a public company. But it's just like, it's hard for them to compete when you have the big guys offer that many products inside of their super centers. Meta right here, 751. Wow. You got $1 away from going below 750. Reddit 231, PayPal 70. That one's holding a little green. Tesla 331. Palantir's still holding 163. It's down, but it's not down as much as it was before. And the S&P is still basically flat. Yeah, that's why Costco prices are the cheapest. They have the most negotiating leverage with a lot of those brands as well. How would you write a covered call for Grab? So I would not write a covered call, but if I did want to do it, I would probably do $6 October 17th. You would have to go that far out to get some premium. You'd get like 10 cents, so it's not really worth it in my opinion. But if you really want to milk some of the premium, then $6 October 17th. But again, Grab just doesn't have a lot of premium, so it's not the best stock to wheel if you're buying it for the like option selling. But if you have a ton of shares and you want to milk some premium out of it, and you don't think it'll be $6 in 2 months, then that is one call you could sell. Amazon right here, 228. That's down 1.4. Salesforce is flat. And then PayPal, 69, 61. The depressing voice when we're down. Dude, it's like, I don't even mean to be depressing, but it's just like, yeah, if everything's red, it's like, there's not that much. Hey guys, it's awesome. Like, what's up? How's your day? Like, no, it's like, it's a shitty day. It is what it is. That is one of the things about being a stock market investor. Like I was actually talking about this with someone yesterday who works a traditional 9 to 5. And we were just having a conversation. I was like, yo, are you into like investing? And he was like, dude, I tried it 20 years ago and I realized that it affected my mental stability. Like, and this guy, it was so funny. He was like, I gave my friend $3,000 to invest. And that 3,000, I was tracking it all up and down. And I couldn't focus on my work. I couldn't focus on my like corporate job. And so I never touched the stock market since then. And this was a guy talking about $3,000 going up or down was like ruining his ability to perform at his corporate job. And so since then, he's never touched the stock. It's been 20 years. He's like, I just know myself mentally. I would not be able to handle it. And there's a lot of people in the chat right now that are probably down 40x more than $3,000, right? And it's like, and we're able to deal with it because we've seen the green days. We know how to deal with the red days. It sucks. It's emotionally gut-wrenching, but nonetheless, it is part of being an investor. And I think that's a win in and of itself, right? Most people cannot handle that type of volatility. It's very, very difficult. You have to have a certain mindset to be able to navigate it. And I think that in and of itself, if there's any bright side to a little bit of the shittiness of today, it's that you're able to deal with it. You're able to stomach it. Because, in a couple years, let's not even say a couple years, let's say 5. In 5 years, most of the names that you're in, if they're a company that's executing, like a Google, like a Hood, like an NVIDIA, like a Rocket Lab, like an Amazon, like these companies are not going anywhere. That doesn't mean they're going to 5x in 5 years, but it does mean they're probably going to be higher. So a red day like this, unless you need the money, which most people, should be investing with money they don't literally need on a day-to-day basis. You know that whatever happens to it in 5 years is likely not going to be the same, barring the entire economy collapses, which if that happens, then everyone's screwed. It's not just the stock market. And that is kind of like, I guess, one mental model people can use on a bad day like this. But it sucks. I get it for some of you. Dude, someone messaged me yesterday. Some of the DMs I get, bro. Someone messaged me. He might even be in the chat. He said, hey, Amit, I have 55,000 shares of Palantir at an $11 average. And so what? Palantir's down $10 today. He is down $550,000 today on paper. But granted, he has an $11 average. He hasn't sold. And he's up a lot more than he's down. Right? So it's like you just know that like the red $500,000, $1 million days are inevitable when you have a very big portfolio, or even if you have 2,000 shares of Palantir. Palantir's down $10. 2 times 10 is 20,000. You're down $20,000 today. It sucks. But it's like you've also been up 20,000 in a day, and so you know what it feels like. And it helps you navigate the turbulence of it going up or down. He needs to write some covered calls. Well, that's actually why he messaged me. He was like, hey, can you help explain covered calls to me a little bit? Because I have a lot of Palantir, and I feel like I could be doing something with it. So yeah, I mean, like just a day like this for him is tough to see on the paper. But again, he knows that he had many days to the upside, and you got to be in the markets to even have a chance to get those days. Microsoft right here. Wow. They are taking it to well below where it was before the earnings itself, dude. 509. My goodness. Pumped to 555 the day of earnings. And this one's now getting hit. Dove says I'm down mid six figures today between Palantir, Rocket Lab, SMR, Axon, Archer. Yeah, and I'm sure you've been up mid six figures on days over the past coming weeks as well, or over the past previous weeks. Like, it's just part of the game. And it's hard for people to understand the nature of all. Like my sister now, like let me look at my sister's portfolio. She's down today $26,577. If this was like 8 months ago, she would text me and be like, what the hell's going on? I haven't gotten a single text message. I don't think she's going to care about it when she comes home from work, because she's also seen her portfolio up like 70 grand. She just knows like you can't get any gain without actually getting or going through the process of pain. And so she's become desensitized to it, which is a good thing, because as an investor, if your portfolio grows like that, you have to become desensitized to it, or else you won't survive in the markets. This is also why hedge funds don't outperform. Again, I told you guys, I was on the phone with a hedge fund manager yesterday from Singapore. And one of the things he told me, which, we've talked about many times on the channel, but he confirmed it to me yesterday. He says the most his portfolio for the fund he manages in Singapore has ever been up in a year is 15%. And that is because they cannot take directional bets because they have to hedge. So if they go long a name and that name like goes up 100% in a year, like many names have this year, they cannot ever see that 100% because they constantly have to be buying puts or selling calls or something to protect their downside, because that's the nature of a hedge fund. And so one of the things he said to me, he was just like, it's really cool to see retail take directional bets and have the like stomach to hold a Nebius or a SoFi, a Palantir, a Rocket Lab, a Robinhood, etc., and see it go up 200, 300, 400% and actually have those types of gains, because the hedge fund guys can't do that. Now, granted, the volume of the money that the hedge funds are dealing with is substantial. It's much more than retail, but still, you kind of have to have the stomach, especially if you're not actively hedging a portfolio, to deal with some of the down days as well. Like Warren Buffett said, if you can't stomach your investments going down 50%, you shouldn't invest. Yes, agreed. It is what it is. It happens on some of these days like this. But still, even with, we're talking about like this is some horrible day. Like, dude, the S&P 500 is not getting hit. Like, this is not some ugly day. We're still holding 640 on the S&P. All-time highs is 647. Like, we are not seeing some dramatic drawdown. It's just algos that are really wrecking some of these more high beta names. But other than that, not that crazy of a day on the broader S&P itself. Let's see if we have any other headlines here. If we're seeing anything else kind of get it. Oh, Mike Wilson was on Bloomberg yesterday. He says he's still bullish. He says he can see some pain, but he doesn't think that we're going to necessarily enter into some massive bear market based on earnings. Oh, wow. We got Michelle Bowman live on Bloomberg. Let's see what she has to say. She is one of the candidates to potentially be the next Fed chair. So here you go. Let's see what she has to say about the state of the economy and when it comes to rate cuts.
We'll know Michelle Bowman lately as one of the dissenters at the last meeting. You talked last weekend about the fact that you haven't really changed your views, so there's not much to add in that, I guess.
Nope, the story's out there, and I haven't changed my views.
Well, the real reason we wanted to talk to you, of course, is because of your regulatory job. First, can you give us a little feel for how it fits into the overall Fed structure? I think most people, unless you're in banking, pay much more attention to the monetary policy activity.
So the role for vice chair for supervision was created in the Dodd-Frank statute after the financial crisis of the aughts, and it's I'm the third person to serve in this role, and so we're moving forward with a number of different opportunities, and we oversee this person in this chair oversees the supervision and regulation of the banking system, essentially.
And here you're going to be talking to the blockchain conference about debanking. How big a problem is that?
Well, I think it's important to understand that the president issued an executive order because it is a problem in the banking system. And one of the first things that I did in assuming this role was to rescind all of our guidance and to change our supervisory materials that referenced reputational risk so that we could ensure that the Federal Reserve is no longer including that in our examinations or in our supervisory activities to ensure that banks can have as customers anyone that they choose to that's engaged in legal activity, and they can't discriminate against them based on their business model, their political views, or otherwise.
Well, okay, so I went through the transcript. She doesn't talk at all about rate cuts or inflation, so we're not going to get anything out of that. The entire conversation was more so about crypto and banking regulations, but no one cares about that right now. We want to know what she thinks about rates, but she's probably not going to answer any stuff about that, especially not right before Bowman speaks on Friday. But she does have a chance to become the Fed president or the Fed chair. I think it's going to be between her, Waller, Kevin Warsh, and then maybe David Zaros from Jefferies. I think like those are your core candidates that have a chance. And I kind of think it's still going to be Kevin Warsh, even though I don't think he's as dovish as some of the other ones. But there will be a new Fed president pretty soon, or Fed chair. And she is one of the people that could be the Fed chair. Grab goes red. Do we get a red on Grab? We do indeed. There she goes, 509. Yeah, she's not going to hold up if the rest of the market's getting hit. SoFi down 3%. Goog's at least holding above 200. And Tesla, even with the China expansion, that's at 331. Are we setting up for a potential pump after Jackson Hole? Well, that's what Tom Lee thinks. That's what he said this morning. He thinks the base case is that we get a pump if everyone's expecting a hawkish Fed. So Friday, we are going to see. Kathy did buy more Hood yesterday. She's been buying more Hood pretty much for 3 days in a row. She bought 120,000 shares yesterday. So it looks like she is continuing to buy more in the hundreds and see if this one can continue to gain momentum. Dude, it is so ironic this happens a day after Chamath launches the Spac, dude. So ironic. But it's happening. The day after the Spac. You know, the funny thing about it is he called it American Exceptionalism Acquisition Corp. I wonder I feel like it's a defense company. It's not Anduril. People are saying I doubt it's Anduril. I think it's going to be like Anduril can go public without Chamath. It's going to be some other defense company that theoretically could not go public without his endorsement. A little ironic. Yeah, a little too ironic. And it'll have to be an American company. This is called American Exceptionalism Acquisition Corp. When did Chamath become the most patriotic defense guy? Like when did this happen? Like I never knew he cared that much about the country like that. I mean, but defense tech is hot right now, so he's leaning in. Yes, Robinhood did launch football prediction markets today. which is very good for the NFL season that's starting. Who here watches football like religiously, like legit, like Thursday nights, Sunday nights? You watch football. Who here actually is like a big NFL fan when it comes to football? Okay, decent amount of you. Decent amount of you. Dude, the only time I watch football is the Super Bowl. When it's time for the Super Bowl, then I watch it. No, not soccer, not the fake football, the real football, which is like American football. No, I'm just kidding. I'm just kidding. The fake football is actually the American football. The real football is what we call soccer. But go Packers. Okay, so I'm a Giants fan because I'm not from New York, but like I claim New York. But I know nothing about the Giants, dude. Like I don't even know who's their quarterback this year. But I guess technically I'm a Giants fan. Amazon 228, Grab 510, Google 200, and then Palantir trying to gap up a little bit to 164. FIFA is better than the NFL. Well, soccer is definitely way more universal than American football. Like, dude, I told you guys this stat a while ago, but during the World Cup, when Argentina won, on WhatsApp, there were 25,000 messages being sent a second because of the excitement around the World Cup. I mean, like that's just a different world when it comes to the level of excitement around soccer. But yeah, it just does not have American football just does not have the global audience as soccer does. Now, here's the update on Palantir and Fujitsu. So Fujitsu today announced the signing of a new licensing agreement with Palantir Japan for the Palantir AIP platform, a software that supports the integration of generative AI into its businesses. Fujitsu was at the AIPCon, so they talked about the different businesses that they work in agreement with Palantir. Again, Fujitsu is a technology consulting firm, so it's not just one business, but there's a lot of businesses underneath them. Kind of think of them like Accenture in the United States, even though Accenture is not just a technology consulting firm. And essentially the partnership with Palantir, which they've had for the past 5 years now, is going to strengthen the ability for them to offer more technology solutions to their clients. So this is good because it means Palantir should be able to potentially scale to new international commercial clients, which is what we need given international growth is not that good. And Japan is one of the biggest markets I think that Palantir should easily be able to go after. So that should be good for them. You're like a typical woman. You only watch the Super Bowl. Well, I guess I am, dude. Like Super Bowl is fun though. I mean, I do appreciate football. I do appreciate like the sport. Like I think it's an incredible sport, and the shit you have to go through to actually like be on the football field is important. But just haven't watched it as much in the past. Dow Jones at an all-time high, folks. So although the S&P is getting hit, along with the NASDAQ, Dow Jones, there you go, all-time highs. Is that all-time highs? I think that's, yeah, all-time highs today. Well, just below all-time highs, but we did hit it today. 45,000 on the Dow Jones. That is likely because of the rotation to value. Home Depot, Coca-Cola, Caterpillar, those are the names that are green today. And so the Dow Jones is benefiting from that. Netflix right here down about 3.1%, 1,200 on the day. Yeah, the boomers are laughing right now. Dow all-time high. There you go. Welcome back, value stocks. Welcome back. They are green. Look, again, dude, as much as it sucks for some of the stocks, for some of the stuff to be red, I actually really do think it's healthy to see the Dow Jones get some love and for this stuff to broaden out. So if we have to lose 5% on Nvidia to gain 5% on the S&P 493, I just don't think that's horrible. I feel like that's probably healthy going into the rest of August, and definitely healthy going into whatever Jay Powell's going to say. Speaking of retail investors, here is Steve Quirk, Chief Brokerage Officer at Robinhood, talking about some of the trends that he sees in retail right now.
Speaking of buying the dip, Warren Buffett buying the dip in United Health. And I wonder to what extent 13F filings motivate a lot of retail investors to follow in the footsteps of these big name investors.
Oh, it's so interesting you say that, because if you look at our RICS data, they were buying this name throughout this month. So I was I was so happy to see that they sort of got to it before Warren did. And they got to experience a 14 or 15% bump as a result of those filings being made public. Generally speaking, I would say the retail customer here looks a lot like a mini portfolio manager for their own household. So, they'll trim out of names that have great appreciation, like right after the tariff news. Some of those names got really pounded, the Teslas, the NVIDIAs, the Amazons. And as they bought those and experienced gains, they kind of rolled out of them and moved into names like United Health. They also moved into Lilly, when there was news about the weight loss drugs. So they're just pretty opportunistic when it comes to seeing, moves that they think are a little exaggerated with respect to the downside.
So, I mean, you got Steve Quirk saying, hey, retail's buying the dip, and they were able to buy the dip ahead of Warren on UNH, which is true because, I mean, I don't know if Warren got a 237 average, but retail did take advantage, at least on Robinhood, of UNH when it got hit down to the 230s, and they're up 15% since then. Although UNH, it is so weird that it's down right here, down 2.4%. Eli Lilly getting some momentum today, up 2%. Again, they had a lot of questions based on their earnings in regards to their drug pipeline, but that one is green, so that one getting some rotation along with Johnson & Johnson. Verizon's up, PayPal's up, Intel's up, and then Palantir down about 5% on the day. And so there you go. There's the red. Yeah, Hood month drop is in 30 minutes. And so we're going to see what Hood ends up dropping here as well. Okay, so this headline, just saw this. Wyoming has become the first U.S. state to launch its own stablecoin. Wyoming Senator, I think Cynthia Loomis, she's from Wyoming. She's been really campaigning Wyoming to become more aggressive when it comes to stablecoins, or when it comes to crypto embracing crypto in general. And so, I mean, this makes sense. And you would imagine other states are probably going to take advantage of something like this if Wyoming's case study. Wyoming was the first state, I think, to introduce a crypto reserve too. So you are starting to see some of the more crypto-friendly states embrace the opportunities to use crypto. Would today be a good day to roll in and down? Yes. However, when you roll in and down, you got to remember that there could be a violent move back up. So for example, let's say you had a Palantir 170 call that's expiring this week. You're up probably 80%, 90% on that because Palantir's at 162. I mean, maybe it's up like 70%, but you have a lot of theta working in your favor because the stock is down significantly from where your strike was. You can roll that down to like 167 and capture more premium for this week. But then what if Palantir rebounds to 167 by Friday? And now you're stuck in a situation where you have to roll it again, which is not the worst thing. You just roll it again next week for 167 or 168, right? You can play that game back and forth. But the point is, if you roll in and down today and collect more premium, you just got to be careful because if there is a violent rebound within your time frame, then you kind of lose all the gains that you had in the first place. But look, if you're expecting more pain and you roll down, then you're going to get a lot more premium because the days where the premiums are the best on puts are days like this. So Palantir premiums on the put side are amazing today. Probably same thing with Hood and a lot of these other names. And if you're expecting it to go down even further, this is when you collect a lot more premium. And it instead of buying the call, you can just sell the covered call at a lower price, like more in the money or at the money, and collect more premium. But it could obviously rebound as well. Figma's down 8%. That one's getting hit. That one's the worst of the day, along with BMNR and Viking Therapeutics. You can just break up the buyback and resell the covered calls on a different day. Yeah, that's also something you can do. That's a great point. So again, you can buy back the calls today, make your 70, 80% or whatever. And then when Palantir goes green or whatever stock goes green, you sell the calls on that day. This also it was one of the reasons why covered calls is a waiting game. Let's say you had covered calls at 180 and then after earnings, Palantir goes to 190. You can wait it out. You can wait. This is what Adam talked about last week. You have opportunities in the market. Everything doesn't just go straight up. There are moments where I don't know why Palantir's down today. I don't know why Hood's down. I don't know why AppLovin's down, but it's down. And Caterpillar, Home Depot, and Goldman Sachs are up. So on a day like this, if you can just be patient with your 180 call, you have the opportunity now to get out of it and you're able to take your premium. But you have to also have the mental stability to not freak out when a stock goes in the money. It's okay if that happens. Everyone will be in that situation, but navigating it, I think, is the most important part with a covered call. Speaking of Palantir, Adam Bergman, who has sold out of Palantir a long time ago, he messaged me yesterday, and he is now officially back into Palantir. But the reason he's in it is because he gave Robinhood $100,000 in their Robinhood strategies to invest for him. So he funded his Robinhood strategies account with $500, with $100,000. I have done mine with $1,000 as of May 7th, and I am up 10%, 10.67%. And so one of the cool things about this product, and I actually wanted to show you guys the portfolio they have me in, and I want you guys to rate if you like this portfolio or not, is that they actively manage it. And so if you don't want to manage your money, if you don't want to pay JP Morgan to manage your money, you could theoretically give it to Robinhood. They charge you $250 a year max, whether you have $100,000 or $250 million. And I mean, so far they've done a pretty good job managing the portfolio. So this is what they have me in. Okay. NVIDIA, this is my growth part. So my growth is 34% of the portfolio. And my stocks are NVIDIA, Google, Microsoft, Broadcom, Johnson & Johnson, Amazon, DoorDash, Uber, AbbVie, Lam Research, ServiceNow, Arista, Spotify, Palantir, Walmart, Intuit, Booking, Apple, Netflix, AppLovin, MasterCard, Costco, Visa, Palo Alto, Cisco, CrowdStrike, TE Connectivity, and Gap. Those are my growth stocks. My large cap, they have IVV, which is the large cap BlackRock ETF. Kind of like the S&P 500. They have me in that. And then value, they have me in Houlihan, Regions Financial, Pure Storage, Bank of America, Fifth Third Bank, Wells Fargo, Mega Systems, Nutanix, and Procore Technologies. That's 7% of the portfolio. And then mid caps, they have me in IJH, which is the BlackRock mid cap ETF. That is 4.9% of the portfolio. So it's 5% mid cap, 7% value, 27% large cap, and then 34% growth. And then in cash, they have me 4% in bonds, 0.5% in cash. And then they have I didn't even know this. They have 18% in emerging markets. So they have me 7% in Europe with the S&P 500 Europe Top 50 ETF, FEZ. And then they have DXJ, which is the Wisdom Tree Japanese Hedged Equity ETF. They have 3% for me in Japan. And then they have 8% for me in China, KWEB. 8% for me in KWEB, which is the China large cap ETF. So with $1,000, bro, they have got me so diversified, and I'm up 11% since I put it in, which I think is slightly underperforming the S&P. I think the S&P 500 is like up 12%. So, theoretically, they need to outperform the S&P for this to be worth it. But on that $1,000, I'm up $106, and it's pretty damn diversified. You got a lot of good U.S. growth companies, a lot of good large cap value plays. You have a ton of international. You have some bonds. You have some cash, and if you put in like $1 million, I feel like they can manage it effectively, which is what Adam's doing with that 108,000. I put it in May 7th. May 7th is when I put in the $1,000. So since then, it's up to 1,100. That is not my solo 401k. No, so Robinhood doesn't offer that. This is a Robinhood Strategies managed investing account. They actually have over 100,000 users and 500 million AUM, but you can basically give them money and they just manage it for you. And they actually give you an update every week. They give you like a voice update on what they did, why they sold something. Just like if you were to call your like private wealth manager, and if he sold NVIDIA or like trimmed Apple, you'd be like, why'd you do that? they give you an explanation of everything they did every single week. It's actually a really good product, dude. And I want to put a lot more money into it next year and just see if they can consistently beat the index. And, you know, I don't have to worry about actually managing a certain part of the money. So I feel like that could also be something that is a product that grows for them very well. Uber is actually up today. So Uber being treated as a value play right there. Uber, wow, almost at all-time highs, 97. Right now it's at 96.30. So Uber joins the party with the Dow Jones, is going green on the day. Not too bad. Not too bad. That always keeps $1 million in dry powder. I do not have $1 million in dry powder. I wish I had $1 million in dry powder, dude. All right, what would you? All right, let's end on this. Let's end on this question. If you had $1 million in dry powder, what would you do with that $1 million right now? Would you do a Robinhood diversified, super safe, different ecosystem type of play? Or are you YOLOing grab or something? Or BMNR? Dude, $1 million. I would be super safe, dude. If I had $1 million in dry powder right now, I would not want to lose that $1 million. Although, you know, the real big gains are when you solidify. It's just, is this the time to solidify at this point in the market? That is the question. Bitcoin right here below 114. This one getting hit over the past couple of days. Ethereum just below 43, almost at 41. That one's also down. So that is red as well. Yeah, look, this right here, FICO, SPGI, Visa, MasterCard, Progressive, Moody's, there you go. It's a little better than Fartcoin. The good thing is about some of this drawdown we're seeing today is that, I mean, things are getting a little bit more reasonable, right? Things are getting very aggressive. Like, even if we see a rebound, like it's a little, Palantir's a bit more reasonable at 163 versus 190. You know? Like, Apple, I would say is reasonable because it's been going up, but like Apple should be getting some of the love if Palantir is getting some of the pain, and that's okay because Apple's been getting most of the pain all year. And I know Palantir is growing way faster than Apple, but Apple's still Apple, you know? So for the idea for some of these tech stocks to be getting massive valuations, but then Apple's stuck, like Apple had a good quarter, they deserve some premium, and they're getting some premium at 231. Like, I think this rotation is not crazy. Palo Alto, even on a red day, dude, Palo Alto usually falls with some of the high beta names. Palo Alto's holding up as well. That's up 4.3%, which is not too bad for them today. I would do 300K in Amazon, 200K on PayPal, 500K on cash for buying the dip, 100K in Enphase, SoFi, AMD, Google, Rocket Lab, and Grab, the rest in cash. 25% BMNR. I see some SoFis here. I don't hate that. Tanner's getting real bullish on SoFi. Even I know Tanner's always been bullish, but he's starting to feel like SoFi really is a shot to break out, just given the earnings growth. And look, that announcement they made today with the blockchain on remittances, that's dude, I like that. That's just them embracing different verticals and becoming a little bit more crypto native. Like, I really like that. And the stock being down 3% doesn't reflect that. That could be a very strong feature that they can build on top of for their crypto offerings going into the latter half of the year. Would you buy NVIDIA before earnings? That is actually a good question. Let's actually end on that. Would you buy NVIDIA before earnings? Let's see what people think. Buy NVIDIA before earnings. I don't know, dude. It's a hard one because, like, I think NVIDIA is going to crush, but if the macro, which we can't judge the macro yet until Powell speaks. If the macro's not in favor, I mean, will the market let NVIDIA actually crush? Now, granted, if J-Powell gets hawkish and NVIDIA goes down to like 165, some like ridiculous drawdown, just because Powell's hawkish, then it becomes way more compelling. Because even if the earnings doesn't like make the stock go up 20%, like you're still getting a decent deal before what should be their best quarter of the year. But if it stays at this range, I don't know. I don't know if you buy right before earnings. Earnings is always a gamble. And last time before earnings, it was 135. So this is a different earnings. This is now a $4 trillion company, 4.36 trillion. So they've got to absolutely deliver the results for us to get there. Question is it a net new position or adding more shares? I mean, it depends on your portfolio, right? If you don't have it, would you buy it if it's net new? If you do have it, would you DCA up into, because everyone would have to be averaging up if you already have NVIDIA. I'm pretty sure. I mean, I would imagine most people don't have an average of 182 on NVIDIA. And that likely means it would be averaging up. Rubio to lead Ukraine security guarantee talks with Trump promising air support as per Axios. Okay, that is a good thing. Means they're making some progress on some of these security guarantee talks, and hopefully that continues into an actual full-fledged negotiation with Russia. But it seems like those deals, or at least those conversations, were healthy yesterday. 56% of you say yes, you'd buy NVIDIA before earnings. Doug says today's not a sell everything day because the economy is going to go crash. Everyone can calm the F right down. Source Rick. Is Rick up today? Is Rick green? If Rick is green, we're going to the moon. Dude, Rick is green, baby. Rick is green. That means these are algos. Rick is the ticker symbol for a holding company that holds a big stake in strip clubs in the United States. Now, technically, you lose a lot of money in the stock market. You might have to go to a strip club to feel better. So maybe that's why Rick is up right here. But yeah, Rick, again, it's being seen as a value play with a lot of the other value plays, and that's why that one's going green. Call Steve. Dude, as soon as you said call Steve, look at what this guy texts me. This is what I'm saying. Like, he says he doesn't use Instagram. This is obviously from Instagram. This is the caption. Do crackheads say I can't get high today because I'm broke? No, they make it happen. Don't let a crackhead hustle harder than you. This is what this guy sends you because it pops up on his Instagram feed. Like, this is what this guy sends. Let me call it. Let's see if he picks up. It's the most random stuff. He will find a way to call it. The phone case is ugly. Dude, it stands out.
5-1.
Okay, you can't pick up right now. He said, can I call you later? No, we want you to call now. There you go. That's the screenshot. Oh, we do have the hood drop in 13 minutes. Okay, so I'll stay till 12. I forgot we do have the hood drop. Okay. So let's stay until we get the mystery drop. I don't know what it's going to be, but it's 3 exclusive offers. It might be something like if you deposit $1, every dollar gets you an entry into some sweepstakes. It might be an ACATS transfer. I have no idea what it is. But in 12 minutes, we'll probably see what it looks like on hood. No, you're not too late to sign up because it hasn't even dropped yet. So once it drops, then you'll see what it is. Open Door, is that green? So Open Door gets some love. This thing was at 420 pre-markets. Open Door, dude, the fact that Open Door is holding like 380 on a day like this is actually kind of bullish for Open Door. Like, this should be a day where you would think it's down 15%. It's like, nope, it's holding up. And that is not horrible to see for Open Door. Does dropping their stock price consider a drop? Dude, that's hilarious. Dude, no, when you guys say these, you're not actually serious, right? Like I know it's annoying hoods from 115 to 110, but we all can acknowledge like stock's done pretty damn well. Same thing on Palantir. Like, these companies have done incredibly well. Like, if you're mad about Tesla, I get it. You have a right to be mad because I know Tesla's been flat all year. But Hood and Palantir, we can't be mad about it. And NVIDIA, you definitely can't be mad about. You can make jokes about it. But I hope no one's genuinely mad. Grab, I get it. Like, Grab, it's not the caliber of those companies. It's not moving. It's dead money. I get when people get upset about that. And to me, I just think there needs to be a long-term thesis on that because it will take some time for them to show their growth. But Palantir, Hood, NVIDIA, those dropping 5-10% after not even the years they've had, the past 4 months they've had. It just feels unreasonable and way too greedy to genuinely be upset about it. Can we be bad at MicroStrategy? Yes, because Saylor keeps diluting, and he's unapologetic about it. But then again, if you bought MicroStrategy, that was the whole point. So you can't be mad at Tom Lee. You can't really be mad at Saylor, even though he kind of lied about the dilutions. I think that's why you can be mad. But you can't be mad about the dilution. You can be mad that he lied about it last week. But like, those are the way those companies offer, or those companies work. Like, what is a stock you can legit be mad about this year? I feel like Tesla you can be mad about. You can't be mad about SoFi, even if SoFi goes back to 20. I mean, this thing was at $8 in April, right? They can't be that mad about it. Uber, you can't be mad about this year. Apple broke out recently, can't be mad. Google can't be that mad. 149 to 200 in the past 2 months. Rocket Lab, I mean, this thing was at 15. It's not at 53 anymore, but it's at 42. Can't be that mad. S&P is still holding 640. ASTS definitely can't be mad. Oscar, if you bought at 23, you're mad. But if you bought anywhere below like 14, I think you're okay. Reddit, you can't be mad. 250 to 230, okay, but it was at 115. Actually, it was even below 100 for like 2 months. Duolingo, you can be mad about. Duolingo, you can be mad about. Crypto miners, you can be mad about. But I feel like a lot of names have not been the worst thing. Axios reports Putin asked China to be a guarantor for agreement with America and Europeans. Really? Is Putin trying to get China involved in this? That complicates things a little bit more. Yeah, Axios. Putin asked China to be a guarantor for agreement with the Europeans. Okay, so basically the security guarantee financing deal, Putin wants China to somehow be involved to confirm the guarantee of the deal taking place. Okay. I don't know if Trump's going to necessarily be happy about that. That is definitely something that we're going to have to see. World War III precursor vibes increasing. See, Putin, this is the issue with Putin. Like, you can't trust him. And I mean, everyone knows that already, but like, I don't think Trump's going to be happy about that, dude. I think Trump was all smiles yesterday. He was like, hey, we have the precursor to a deal. We have a shot to really make something happen. Let's get Putin on the phone. Let's see what we can do. Now Putin's like, well, we got to get Xi Jinping on the phone. And I don't think Trump's going to be happy about that. China probably is happy. I mean, they want to make sure they're involved in everything. Trump has not tweeted about anything yet. Trump was on Fox News this morning, and he was basically he had a bunch of quotes about how the meeting was really good yesterday and that they're making a lot of progress. He also said Putin agreed to meet with Zelenskky during the call they had yesterday. And he said he did not call Putin in front of European leaders. And he also said that a warm relationship with Putin is a good thing. He also said Europe is willing to put people on the ground. There will be some form of security, but it can't be NATO. That's kind of the core thing that Russia wanted to guarantee on. And I think in that Alaska meeting, that's what Trump guaranteed him, is that Ukraine won't join NATO, but they will still give them some type of security. Dude, this is wild. If Trump pulls this off somehow and gets a peace agreement, I think we all got to give him credit, but it is going to be complicated, bro. It is not going to be easy to get this thing to play out. So it looks like China entering into the situation just makes this a bit tougher. Does a firm have earnings today? What companies have earnings today outside of Home Depot? Oh, United? No, not United. United they already had it. Today, we have nothing after the bell. We already had them. So a firm, I don't know when a firm earnings is. I don't think it's this week. At least I don't see it this week. Next week, we have Dell, Marvell. Oh, next week, we have Affirm, Dell, Marvell, Ulta, Best Buy, CrowdStrike, obviously NVIDIA, Snowflake, Iren, Webull. That'll be a big one. Autodesk. The only concern I have with Affirm is that buy now, pay later has spiked up, but what about the delinquencies within buy now, pay later? Affirm's been really good managing their delinquencies. So I think Max Levchin is like one of the best in the business of like actually being on top of their delinquencies and their credit loss provisions. But like you just don't know going into this environment exactly how well they'll be able to pull it off. So I probably wouldn't buy a firm before earnings, like personally for myself. It also is up 21% this year, so it's done well. Also, if Powell gets hawkish, the whole next week of earnings could take a different spin. So that Friday meeting is just going to be very, very important. Yeah, NVIDIA also still down 2% right here. All right, we got 5 minutes. Yeah, NVIDIA officially down 2%. It was down 1.7. Now it's down 2. We got 5 minutes until this hood thing drops. Let's see what it is, and then we will end out for the day. What do we think it's going to be? Do we think it's going to be like, I don't know. I'm not expecting it to be that exciting, but I hope it's something cool that everyone can participate in. But in 5 minutes, we'll see. Let's do word of the day before we get the hood drop. Word of the day. Oh my goodness, dude. Why do they do this every day? It looks like blithesome to me. Blithesome. That's what it sounds like. That's what it at least looks like. I think it's blithesome.
Blithesome.
Okay, there you go. Blithesome. That Y kind of tripped me up in the pronunciation. Lighthearted, merry, cheerful. The team cheered in a blithesome unison after the victory. He whistled a blithesome tune while making a quesadilla. Well, hopefully today is still a blithesome day, even with everyone down tons and tons of money. Because at the end of the day, we are all humans on this planet. That's why, like, when things get really bad, you start looking at your health. You're like, well, I have a wife, I have kids, I have a house, I have a car. Like, you start like, I have this, I have that. Like, but no, in general, a little bit of a red day is not that crazy. Today we yearn for a return to blithesome markets. Yes, exactly. Dude, HIMS is down 5.3. Holy crap. All right, HIMS right there, 42.72. $2 and it goes below 40. HIMS is now below a 10 billion market cap, 9.6 billion. Continues to be one of the cheapest growth stocks on the market. And that one is getting hit. Yeah, the heat map gives a really good overall picture. I mean, again, taking a look at this, it's not as bad as it seems. Big tech is getting hit, but everything else is doing okay, which is, I think, appropriate. Okay, so we got 2 minutes. Let's see what we get on this hood drop. And then we will be done for the day. Is this the dip the institution's waiting for? Maybe. I mean, down 1 or 2% on the Mag 7s. I don't know if that's enough for the toots, but you got everything else that's green. So it's not really a market pullback. It's just big tech taking a breather, which is healthy. It's like we joke that like it's down and we feel bad, but it's like, again, when you look at this heat map, this is very healthy. For NVIDIA, that is up 50% in the past 4 months to be down 3% today. And for Walmart and Costco and Eli Lilly and Berkshire that have been underperforming NVIDIA dramatically, for them to get some love, that's just for sector rotation. That is not a bad thing. Now, if everything else was red, it would be a little bit different, like August 1st, but we're just not seeing that in the way this is playing out. Yeah, also, where's the VIX today? Did the VIX even spike? VIX is up 1%, bro. Don't like this is nothing, bro. Like, we've been through VIX going up 50% in a day back in April. Like, get the VIX above 20 before we really start complaining. This is just not. And it could happen maybe on Powell on Friday, but it is just, we're not necessarily seeing that in the same way. All right, folks, here we go. Let's see. Hoodie mystery drop should be launching in about 30 seconds. And let's see what we get. Dude, Robinhood should absolutely add a heat map. That would be so nice to see. There's a bunch of these different things they can add that they just don't have yet. It would be nice. All right, I think we got about 20 more seconds, and then we're going to get this mystery drop. And we'll see what they have. NVIDIA is August 27th. August 27th for NVIDIA. All right. Well, there you go. We're giving away 5,000 gold bars, and 3 are worth 100,000 each. Boom. 5,000 gold bars. Every dollar you put in, you get 1 deposit. Or every deposit you put in with $1, you get 1 entry. I thought it would be something around deposits on dollars. So they're giving away 1.2 million in solid gold to gold members. Every dollar is a new chance to win. You hold your deposits till September 15th. 3 lucky winners get a 1 kilogram gold bar worth 100,000, and 4,997 winners get a 1 gram bar. It's kind of what they did with Bitcoin. They gave away 5 Bitcoin. So now they're giving away 3 kilogram bars worth 100K. And then the rest are worth a gram. That's about 1.2 million in solid gold. Dude, not bad. 1.2 million. That's the marketing spend they're doing on this giveaway. There you have 2 other giveaways. If that 1.2 can give them a nice ROI on people signing up to gold and depositing, then that would be the giveaway that they end up doing. All right, cool. That's what we got. Yeah, they gave out the Bitcoin. If you didn't get the announcement, you didn't get it, but they said they sent out the announcement. So I did not win the Bitcoin, but if you did, then you got to have it. All right, folks. Thank you, everybody, for being here. We'll be back on the market close, and we will keep going from there and see how one of the most red days we've had, at least on high beta growth since August 1st, ends up playing out till the end of the day. The deadline to deposit is September 15th. September 15th. All right, folks. Thank you, everybody. I'll see you guys in a few hours. Bye, everyone.